Yeah.
I'll go live now. Even the can start.
Yes. Good afternoon, everyone. Welcome to Recall and Revise Marathon session of CA Inter Paper 4 Part A, Direct Taxation. So I'm Hemnath. I'm a CA final student. I will be the host for today's session. I'm delighted to welcome CAP Ramasamy sir, who will be taking today's marathon session. I'm very excited to have you on the session, sir. I would like to welcome all the CA Inter students who will be getting utmost benefit out of this session. So students can post their doubts in the chat box in YouTube. We will be taking the question at the end of the session, like at 10 minutes at the end of the session. This session of direct tax will end at 4 o'clock. So 10 minutes before that, we will take the questions and we will answer as much as possible. So direct taxation is from 2 to 4. Indirect taxation is from 4 to 6. Yeah. In the same video, it will be continuously going on. I would like to introduce Ramasamy sir before going into the session. Ramasamy sir is a FCA fellow member of ICAI, and he is a graduate member of Institute of Cost and Works Accountant of India. He have done his BCom from University of Madras. Sir has got 26 years of experience in accounting and auditing professional in various works of finance and budgeting, statutory compliances. So he have got plenty of experiences to share with us. Sir is guest faculty for direct taxation at SIRC and various branches. Sir is he have been a member of Chartered Accountant Study Circle, that is a professional body at Chennai. He is an editor of CASC bulletin, that is a monthly newsletter brought out by the same Chartered Accountant Study Circle. So this is a brief about our CA Ramasamy sir. Now I would like to hand over the session to you, sir.
Thank you, Hemant. Thank you so much for the nice introduction. And I will now start the meeting. Now I had a basic inhibition, like we have only about 2 hours, 120 minutes. And in this 120 minutes, what are we going to do? And the guiding line was, okay, how to approach for the exams. Now, as students, you can feel free to put your questions on the chat box as and when you find anything to ask. And to start with, as you all know, income tax, one of the basic statutory warnings that we give is the rate of evaporation is very high in income tax, isn't it? The rate of evaporation is very high. What you read today, tomorrow you will not be able to understand, or you will not be able to recollect. And then another thing is reproducing in the exam. That is another big issue. So now we have to overcome this basic issue, you will have to really read it continuously. Okay, it is not a one-time affair. Even if you have studied today, tomorrow also you may have to have a look at the same topic again and again. So this is basically regarding the problem that we have with income tax, because what we study now, after a week or so, we go blank totally. Okay, today you might have understood it very well, but when you're asked to recollect it after a week or so, becomes an issue. So this is one point to remember. Second one is the basic question everybody has is, should we reproduce the section numbers in income tax section numbers? Are we supposed to reproduce? It is not really important as far as your intermediate is concerned that you have to reproduce the section numbers. However, if you're able to reproduce it, then your answer will be very authentic. Okay. Your answer, when you say this particular provision is as per this section, this is what it says, your answer will be very authentic. And should we mug up the section numbers? Not really required. Actually, when you start studying, you have to read it along with the section numbers. For example, how to remember it? In each of the heads of income, you'll have deductions. You take salaries, you'll have section 16 deduction. You take house property, you have section 22. You have PGBP, you'll have from section 28 till 44. You will have, 40. You'll have your deductions, okay, 28 to 40 or 37, and then disallowances. And as far as your capital gains is concerned, you strictly don't have a deduction, but you have section 48, the computation section, which says what will be allowed as a deduction. That is, and then you have go for income from other sources, you'll have section 57. So we do not say that the gross income is taxable. We always say the net income is taxable, which means for every head of income, expenditures are allowed as a deduction. From what? From the income chargeable under that section. And each section also, each head of income has a chargeable, okay, section, which is section 15. You take salaries, 15 tells what type of income is chargeable. House property, section 22 tells you what type of income is chargeable. PGBP, section 28 tells you what is chargeable, and then capital gains, section 45, and income from other sources, 56. So this is how it is easy to remember. Easy to remember the sections, the deductions, if you know that the basic concept is what is the chargeable section, what is the deduction which gives deductions, what are the disallowances, what are exemptions. If you're able to find something common, okay, then it will be good. So this is one another thing that you should remember. The next point that you have to remember while preparing for the exams is, or at the examination hall, is reading the question. When you read the question, you need to really understand the question, interpret the question, find out the critical points in the question. Very often we make silly mistakes. We do not read the question properly. We understand it differently. Assessment years, previous years, you will have to be very clear. In the same problem, there may be 2 assessment years, 2 previous years for which you're supposed to compute income. So, and you should not get confused with that, or you should not make a mistake in that. Similarly, suppose A is gifting to his wife, Mrs. B, Mrs. A, then you'll have to look into you'll have to read the question properly to understand who is giving to whom, who is receiving income, and in whose hands it will be taxable. So reading the question, understanding the question is very important. Next thing is, when you write an answer, assuming it's a slightly theoretical question or something which you have to explain, you'll have to state the facts of the case, relevant facts of the case, which is relevant, okay, to the particular question, that you will have to first understand. Next is, you will have to find out which provision of law is applicable, which section of the law is applicable to it. Third point, you have to compare your facts of the case and the provision of the law. Compare it. Fourth one, in case you have any case law, then you can apply that. Otherwise, you can go on to your conclusion. This has to be done mentally as well as while writing. In both the cases, you will have to do it. Is that clear? I'll repeat it. The relevant facts of the case need to be understood. In case you're jotting down, you can jot down the relevant facts of the case. Then the exact provision of law, which section is applicable to that. Okay. or which provision is applicable. And then third is compare. What is the fact? What does the law say? Fourth one, if you have any judicial precedents, okay, case laws, you can look at the case laws and then come to a conclusion finally. This is what is to be done. Is that clear, please? Okay. If you have any questions, you are most welcome to put the questions on the chat box. Is that right? Right. I'll answer it then and there. You don't have to wait for the end of the class. You can say that. This will be more interactive. Okay. Now I'll
Also, I
just.
will share the questions whenever I got. Sure.
Yeah, please. So now what I'll do is I'll just try to take you through is the screen visible, please?
Yes, sir. Yes.
Screen is visible. Okay. While have the chat box also. 1 second. Okay. Now I have just taken a small analysis of the questions or the heads of income. Okay, you just have a look at it for your observation. The last 4 exams, what I've done is agricultural income. Okay, starting with agricultural income in May 22, they've asked a question. Coffee growing and curing. Residential status and scope of total income. Regularly, they've been asking question on that. You know whether you are a resident and ordinary resident, or resident and but not ordinary resident, non-resident. Section 6, along with section 5, scope of total income. Okay, for a resident, whether this income is taxable or not taxable in India, like that. Okay, then you have computation of gross total income, which basically is the heads of income. Okay, the 5 heads of income, a combination of them along with chapter 6A deduction, or without combination, it could be a particular head of income alone. Salary, clubbing provisions, ATC, ATCCC, house property, okay, capital gains, other sources. By and large, if you see, this forms the major portion, the heads of income, the 5 heads of income together with your chapter 6A deductions out of your 60 marks. Okay, out of your 60 marks, the major portion gets covered here. Okay. Then you have clubbing provisions separately. They've asked on clubbing provisions. Also, almost last 3 exams have been asking set off and carry forward of losses, TDS, TCS, and then return of income. This is what has been happening regularly. Okay. So you will understand the importance of the heads of income understanding. I'll tell you why. Because in your intermediate, they ask you the computation of income under the particular heads and the gross total income. At your final level, they will not ask you the computational provisions. They will ask you what you have understood. It will be more application oriented. Okay, real-time application oriented. Here, if you have understood the fundamentals of law, then you can compute the income. So the concentration is whether the student has understood the fundamentals of income tax. Is that okay? So this is how it is. This is just for your information. You can also look at it. But by and large, your heads of income are important. And they have been also asking questions in residential status, section 5, 6, 9. Okay. Section 5, 6, and 9, income deemed to accrue or arise in India. If you go to the final level, they can ask a separate question in section 9 alone. Section 9 alone is that very important. You understand? So that is one thing. And then clubbing provisions, set of carry forward losses, the other thing. TDS, they ask you to each question of 2 marks each or 3 marks each. They ask you questions to find out whether you know the TDS provisions, deductions, latest amendments, etc. Okay. Now, any questions you've got on this? Any questions you've got on this, you can ask. You can type your message. Otherwise, we keep moving on. Okay.
Yes, sir. No questions, sir. I
Yeah.
will inform as when
Yeah.
I am.
Fine, Hemant. Fine. Okay. Right. So this is one thing which I thought I will let you know on how to analyze. Sometimes what happens is they will ask question in one exam, the next exam they don't ask, then the next exam they keep asking alternate. May, then next May, in between November they don't ask a particular chapter. But in income tax it is not like that. All the chapters are important. It is very, very essential that you know anything. There's no question of, sir, can I leave this chapter? Can I concentrate only on this? No. Okay. Nobody can tell you that this chapter can be left. Tell me heads of income. How can I say, don't read house property this time? Next time they'll ask you. It can come in a part of, as it come as part of a gross total income problem. Okay. So that is important. So please be aware of that. Then next thing is if you have to look at the, now they ask you a lot of what you can say, multiple choice questions. Okay, multiple choice questions. I'll just take you through an example of multiple choice questions, how or what is being asked. We look at this multiple choice question. One question we'll look at just for your understanding. This Mr. Suresh, born on 1/4/1962. The moment they give you the date, automatically you'll have to find out what will be his age. So, is he a senior citizen or not? As on 31/3/22, he will be 60 years old. He will be a senior citizen. So, keep that in your memory plus. Furnished his income, return of income for assessment year 22-23 on 25/7/2022. This date is given so that under 139(1), okay, under section 139(1), the due date for filing return 31st July. So has he filed the return within the due date, or is it a belated return, a delayed return? He has opted for the provisions of section 115 BAC. You know, 115 BAC is the concessional rates of income tax, and it is an option available. You can go under the regular provisions of 10, 20, 30%, or you can go under the concessional rates given in 115 BAC. So you will have to keep in mind, this is the option which the SSC has exercised. He had shown the following income in the original return of income: salary of 10.5 lakhs, interest from savings at bank account 15,700, interest from fixed deposits 50,000. So if they say salary of 10.5 lakhs, please understand or take it that it is after the standard deduction. This is what has been shown in the original return of income, which means this is the final income under the head salaries, income under the head other sources, savings bank 15,700, and interest on fixed deposit 50,000. During the previous year 21-22, he paid interest on loan 2,50,000 for purchase of self-occupied house property. He contributed 1,50,000 towards PPF. He paid health insurance premium of 40,000 by account paycheck for self and wife. He paid 2,200 in cash for health checkup and rupees 4,000 by check for preventive health checkup. Health checkup, you know, section 80D, cash payment is allowed. Up to maximum health checkup, preventive health checkup, you can claim is only 5,000 rupees. Okay. So this is what will be available. He also paid medical insurance premium of 29,000 during the year to ensure the health of his mother, aged 80 years, senior citizen, okay, super senior citizen. He further incurred medical expenditure of 18,000 on his father, aged 81 years, who is staying, one second, who is staying with him. His father is not covered under any Mediclaim policy. When his father is not covered under any Mediclaim policy, medical expenditure will be allowed. He is 81 years old and it will be allowed. Okay. That 18,000 rupees. As far as mother's premium is concerned, that will be allowed in medical premium. He met one of his friends, C.A. Nakul, on 31/1/2023. While discussing with his friend told him that the concessional rate under Section 115 BAC is not beneficial to him. He advised him to revise his return of income and not to opt for 115 BAC. See, under 115 BAC, no Chapter 6A deductions are allowed. Okay, no exemptions are allowed. Okay, so, however, Mr. Suresh's son, who is employed in the accounts department of XYZ Limited, is of the view that the once option to pay tax under 115 BAC is selected in original return, it cannot be changed in revised return. This is the opinion of his son. Now, have you understood the question? Or while reading the question, you have to read it very, very carefully, trying to imbibe, trying to understand all the facts of the case, the points. Is that okay? From the information given above, choose the most appropriate answer to the following questions. 1 second, I think I have somebody here who's waiting for me. I will just handle him and then come. 1 second. Yes, sorry, I had somebody visitor here. Okay, so now reading the question is very important. Take your time to read the question, understand it. Okay, because you may not have much time to read it again and again to go back. That will be waste of time. What is the tax payable by Mr. Suresh for assessment year 22-23 as per original return of income? Which means original return of income is as per without taking into account he has opted for the provisions of 115 BAC. Concessional rates of tax he has taken. Now 10.5 lakhs, 15,700, 50,000. So this is what is the income. Now, would you like to work out this and try to tell me which will be the correct answer, please? Will you be interested in doing it? Yes. Kindly let me know. Would you tell me what is the answer quickly? Concessional rates, 5%, 10%, 15%, 20%. Can you do that? The total income is 11 lakh 15,700. Correct? When the total income is 11 lakh 15,700, what will be the tax payable as per section 115 BAC? The answer will be including a surcharge of 4%. Okay, it'll be B, 102070, rounded off to the nearest 10 rupee. Nearest 10, is that okay? Now, this person, even though he is a senior citizen, his basic exemption will not be 3 lakhs because he's opting for 115 BAC. His basic exemption will be only 2.5 lakhs. Please keep that in mind. So for the balance 2.5 lakhs, it will be 5%, 12,500. Then for the next 2.5 lakhs, it will be 10%. That is up to 7.5 lakhs, it will be 10%, 25,000. The next will be 15%. Next 2.5 lakhs, 15%, 37,500, and then 23,140, 20%. Okay. For 1,15,700, it will be 23,140. The total will be 98,140 plus 4% cess. 4% cess of 3,000, I think 926. It will be 1,02,066 rounded off to 1,02,070. Is that okay, everybody? Okay. Now the next, that was only the tax payable to find out whether the student is aware of the concessional rates of tax and the slab limits. Okay. What is the total deduction under Chapter 6A allowable to Mr. Suresh if he does not opt for the provisions of Section 115 BAC, which means all the Chapter 6A deductions will be available, assuming he goes under the normal provisions of the Income Tax Act. Okay. In that situation, what will be the total amount of deductions? You have various options. Out of this option, option C will be correct. 2,92,000 will be the correct answer. 80C, you will have 1,50,000. Okay, you have 80C. Okay, he contributed 1,50,000 towards PPF. So you'll have 80C, 80D. You will have 40,000, the premium paid for himself. Okay, he paid health insurance premium for himself, 40,000, and then for his mother, 29,000. Both will be allowable. Then for preventive health checkup, 5,000 will be available. Okay, and for his father's medical treatment, actual expenditure, 18,000 will be available. And 80 TTB for the fixed deposit. Okay, total interest and deposit for senior citizens, 50,000 will be available. Okay, so if you total that, you'll get 2,92,000. If you have any questions, you can ask. Okay, if you have any doubts, you can ask. Next one is, what is the total income of Mr. Suresh under the normal provisions of the Act for assessment year 22-23? What they're asking is, they are saying you're not going under 115 BAC, you are going under the normal provisions of that, which means Chapter 6A deductions benefit is available. So as we said, your income is 10 lakhs plus you have 15,700 plus 50,000. Okay, so it will be and in that 10,50,000, you will have 50,000. You will be having your standard deduction. Okay, so it will be 10 lakhs. So 10 lakhs plus 15,000 plus 50,000 will be 10 lakh 65,700. When you go in for BAC, you will not give that standard deduction of 50,000. You'll take the whole figure. You understand, when you're calculating under Section 115 BAC, you will not give deduction under Section 16. You'll take the entire amount, gross amount. But when you're going under the normal provisions, you'll give the deduction of 50,000. So it will be 10 lakhs plus 15,000 plus 50,000. So 10 lakhs 65,700. And as far as income from house property, you have got a interest of 2,50,000. You can claim 2 lakhs. It is a self-occupied house property. So you can claim a loss of 2 lakhs. You can adjust that 2 lakhs. And then you will have, as we have seen in the previous point, Chapter 6A deductions, 2,92,000. If you minus that, you'll get 5,73,700. So answer B. Is that okay, please? Anybody's got any doubt? I think I'm explaining. In case you still have a doubt, you can get it clarified. Then the fourth one. Compute the tax liability of Mr. Suresh for assessment year 2023 if he does not opt for the provisions, which means he's going under the normal provisions of the Act. Okay. In that situation, what will be the answer? It will be, I think the fourth question. It will be 25,730. It comes to 25,727 but you round it off to the nearest 10, it will come to 25,730. This is your 10%, 20%, 30%. Okay, normal rates of tax. And here you will take the basic exemption as 3 lakhs. Please understand, normal provision, you'll take the basic exemption as 3 lakhs, right? Can Mr. Suresh file his revised return of income for assessment year 22-23 and declare income under the regular provisions of the Act? He says yes, no, no. C is correct, because when is his friend saying? His friend, you understand, is saying somewhere on 31/1/23, which means it will be a belated return. Okay, you cannot revise a return which you have already filed under BAC. You have already originally filed under 115 BAC. Therefore, Mr. Suresh cannot revise his return. Is that okay? This is one. The next question, if you want, also we can just have a look at it. This is regarding 35 AD. So 35 AD, you know, specified businesses, capital expenditure will be allowed as deduction. Out of that, hotels are 1-star category and above hotels, 100-bedded hospitals, 100-bedded hospitals, all this come under that. All capital expenditure except cost of land will be allowed as a deduction. Is that okay? So here you look at it. A proprietor commenced operations of the business of new 3-star hotel in Mumbai on 1/7/21. He made a total investment of 7.58 crores till 36. 1 second. Yeah. So out of the total investment of 7.58 crores, 1.58 crores was used for purchase of land. As I've told you earlier, cost of land will not be allowed as a business deduction under 35 AD. Okay. Rupees 4.7 crores was used for constructing a hotel. So construction expenditure will be allowed. And the balance 1.3 crores was used for purchasing furniture. This will also be allowed, capital expenditure. He wants to avail the benefits of deduction under section 35 AD as he satisfied with all the conditions prescribed under section 35 AD. His profits and gains from business for the previous year 21-22 is 50 lakhs before claiming deduction under 35 AD. He wants to file his income tax return on 12/12/2022. Okay, which means it is a belated return, delayed return. How much deduction Mr. Raja can claim for assessment year 22-23 and the losses which he can carry forward to 23-24. Now the options are, he can claim deduction of 7.58 crores from his business. Not possible because this includes a cost of land in this. He can claim a deduction of 6 crores from his business income and carry forward the business loss of 5.5 crores. He can claim a reduction of 6 crores from his business, but cannot carry forward the business loss of 5.5 crores. He can claim the deduction of 7.58 crores. 7.58 is all not possible. You know, first and the last one, 7.8 not possible. So it should be between B and C. Now, he can claim a deduction of 6 crores that we agree. Okay, that is, you leave that 1.58 crores cost of land, the balance 6 crores can be claimed as a deduction, but it is a belated return. Therefore, he cannot carry forward the business loss of 5.5 crores. If he wants to carry forward a loss under 35 AD, then he should have filed the return within the due date. Is that okay, everybody? Understood? This is for your understanding how to read the question. The first time you read the question, read it properly, and then you continue. Mr. Raj makes a gift of 25,000 to his wife. Mrs. Rama on 27.3. This is more like clubbing provisions. Mrs. Rama invests that money in a partnership firm as her capital contribution. Part of it is her money, part of it is her husband's money. During the year ended 31/3/22, she earned the interest of so much and she gets a salary of so much. What amount shall form part of the total income of Mr. Raj? That is what will be the clubbing provision applicable in the hands of Mr. Raj. If Mr. Raj has given some money to his wife and his wife invests that as her capital contribution in the firm, and if she receives interest, that interest on capital contribution provided by her husband will be taxable in the hands of the husband. Okay. The salary income will be taxable in the hands of the wife only, not in the hands of the husband. So that portion of the interest relatable to the gift received from her husband and invested as a capital contribution, that interest portion will be taxable in the hands of the husband. Right? Salary will not be taxable in the hands of the husband. Now the options given are rupees 3,000 as interest on capital from firm. Now the total interest is 12,000. Okay, the amount invested is 75,000. The amount given by the husband is 25,000. The amount put in by the wife is 50,000. So 1/3 has been contributed by the husband. So 1/3 of 12,000 will be 4,000 rupees. So the first answer says only 3,000. That is not correct. Second answer also says 3,000, not correct. Interest on capital. Third answer says 4,000 as interest on capital and from firm, and rupees 40,000 as salary from the firm. That is also not correct, because as I told you, salary will be taxable in the hands of the partner only, it will not be clubbed. Therefore, the fourth answer is correct. Nil is correct. Is that okay? I hope I made it clear. Okay. And in case if the husband gives money to his wife, and if the wife starts a proprietorship concern and she invests that money as her capital, then whatever be the profit she receives from the proprietorship concern will be taxable in the hands of the husband. Is that okay? Right? And the next question is dealing with advance tax, basically. That is, if you are winning a lottery and TDS has been deducted under 194B, then are you required to pay advance tax? No, you're not required to pay advance tax. Okay. Mr. J won 9 lakhs, Mr. Viru won 8 lakhs. TDS under 194B was duly deducted. Assuming that this is the only source of income, are Mr. J and Viru liable to pay advance tax for that year? No. First option A, no, Mr. J and Mr. Viru are not liable to pay advance tax. Okay. So winnings from lottery, tax has been deducted at source. Okay. So this is, if you have any questions in this, you can ask me. Anybody? Any questions? If you have any questions, you can please ask.
No questions, sir. We can continue.
No questions. Okay.
Actually, questions are very less. Students are not asking questions. I have seen 4 sessions,
Okay.
but questions are very less. Students are not.
Okay. Actually, they should start asking questions. Only then you will, all the doubts will get cleared. Whatever you have inside will get cleared. So please do ask questions. No, don't hesitate. Okay. Right. We'll continue. Now, as far as the heads of income are concerned, if I go on to the heads of income, okay. Now tell me what you would like quickly. If you want me to go through, I can go through the heads of income. Okay. This is regarding what you can say, agricultural income. Okay. Um, okay. Here, one thing I would like to tell you all is, when you read the definition of agricultural income, please understand there is one concept called as specified area. Okay. Now, I'll just suppose the question arises. Suppose I have land in heart of the city. We'll assume Chennai city, next to the CA Institute. The CA SIRC of ICAI is on Nungambakam High Road. Okay, heart of the city, Mahatma Gandhi Road or Nungambakam High Road. And next door we have income tax office. Assume that is an agricultural land. Okay. Now, definitely it will be classified as a specified area, isn't it? Okay. That land is a specified area because any area, okay, which is comprised within the jurisdiction of a municipality or a cantonment board and which has a population of not less than 10,000. So definitely it'll come under the first one, A category. It will be a specified area. Now, the question is, on that piece of land, I am growing jasmine flowers. Okay, floriculture. I'm undertaking the activity of floriculture. I'm growing jasmine flowers and I harvest the flowers and sell those flowers and earn income. Will that income be called as agricultural income or not? Yes or no? It is within India. So does it mean that the agricultural income will be exempted or taxable? I'm normally accustomed to people responding. Anyway, now I'll give the answer. Okay. Now, that is agricultural income. Wherever you do within India, okay, agricultural activity, then it is agricultural income, even though it doesn't matter whether it is a specified area or not. It is agricultural income. Then in that situation, what is this? Any income, okay, derived from any building. Please understand income from building. So the specified concept itself, specified area concept is itself applicable only to income derived from building situated on agricultural land, which is coming under a specified area. So suppose I have an agricultural land in a specified area, the same, we'll go back to the same example. Okay, on Mahatma Gandhi Road, okay, we have an agricultural land next to the CA Institute. On that agricultural land, I'm growing jasmine flowers. And on that agricultural land, I have a small building. That building has been let out to somebody. And I am receiving a rental income of, say, 5,000 rupees per month. That will not be treated as agricultural income. It will not be exempted. It will be taxable as income from house property. Is that understood? However, if there is a building on that agricultural land and it is used as a dwelling house for whom? For the laborer, cultivator, okay, or receiver of rent and revenue, or receiver of rent or revenue, if he is occupying the premises, then the income derived from that building will also be treated as agricultural income and it will be eligible for exemption under section 10 subsection 1. Is that clear? And any rent or revenue derived from land which is situated outside India, okay, that will be taxable. So what is exempted is agricultural income derived from land situated in India. Is that clear? And the second point also says income derived from such land by agriculture. By agriculture means they say, suppose at the backyard, if there is some tree which is growing by itself, and then you cut it and sell it, that will be income taxable. Okay. Because you have not done any agricultural activity, you have not sown the seed, you have not watered it, You have not nurtured it and you have not got anything, okay, out of that. Therefore, that will be taxable. So you will have to always look into each one. What is agricultural activity? Agreed? So that is one thing which I thought I tell you. And we say as far as agricultural income is concerned, it will be aggregated. Suppose this is for cases where a person has got agricultural income and non-agricultural income. We do an aggregation because of which your tax will go up on the non-agricultural income portion. Okay. So you take agricultural income, you take non-agricultural income, add both A and B. You calculate the tax payable. Okay. And then the aggregation of A and the basic exemption limit, that is agricultural income plus basic exemption limit, what it is, and then find out the net tax payable. This will give you a higher rate of tax to be paid to the government. Okay. So if you have anything as far as these are concerned, you have special rates of tax where, for example, you go to Tata Tea Estates in, say, Munnar. Okay, they grow the tea, they cure it, and then they grind it and then make it into tea powder and then sell it as tea leaves or tea powder. So ultimately what income is derived is when you sell the tea powder, that is the income derived. From that, how much portion of it is to be transferred, treated as agricultural income, how much is to be treated as business income. 60% has to be treated as agricultural income and 40% has to be treated as business income. Same thing with the coffee grown, cured, roasted, and grounded. Coffee grown and cured alone. Okay, in that last question, 2022, the question was regarding coffee grown and cured. The income tax rule was 7B subsection 1 and rubber. Okay, so this is a place where they've got all rubber, coffee, manufacturing of tea, etc. So all this was getting covered in that and how to calculate. Agreed? These are all examples of and now one more thing. In case of sugarcane, suppose I cultivate sugarcane and if I have a factory, okay, sugar refining factory, and I use that sugarcane as captive consumption. This sugarcane can be sold in the open market also, but instead of selling it in the open market, I consume it in my factory. In that situation, how to calculate the agricultural income? They are giving you the cost of cultivation, the market value of sugarcane when transferred to factory. Okay, the day on which it is transferred to factory, what is the price in the open market? It is 10 lakhs. Other manufacturing cost 6 lakhs. Sale of sugar, this is finally what you get from the sale of sugar. Salary of managing director who takes care of the operation of the company. Determine the agricultural income. Now, if you look at it, as far as agricultural income is concerned, you take the market value. On the day you consumed it, whatever is the market value of that price sugarcane, you take that, less the cost of cultivation, this will be agricultural income. Here we don't have percentage basis. As far as the business income is concerned, the sales revenue is 25 lakhs from the sale of sugar. Less market value of sugarcane, 10 lakhs. Less salary to managing director, less other manufacturing costs. This is 6 lakhs. This is your PGBP income. This is how it is to be calculated. Is that okay, everybody? So I think I've given you a good idea of what is agricultural income. Okay. Basis of charge. Here, this is what I said. You get questions on section 5 and 6 put together along with section 9. Okay. 5, 6, and 9, all three put together, you'll get questions. 5 is what you say, income received or deemed to be received. In India, you take resident and ordinary resident. His entire global income is taxable. Wherever he receives it, whatever he receives it, if he's classified as R and OR, his entire global income is taxable. As far as a resident but not ordinary resident is concerned, One income alone is not taxable. That is income accruing or arising outside India. I'll give you an example. Suppose a person is working in Dubai. Okay. And what he does is, out of his earnings in Dubai, he purchases a building there and lets it out on rent. He gets rental income from that. Okay. As long as he's abroad, as long as he's a non-resident, it is anyway not taxable in India. But what he does is, he resigns the job and he comes down to India for permanent settlement. Then in that situation, what happens is, the year in which he arrives and the year after that, the subsequent year, for 2 years, he will be classified as R and NOR. For those 2 years alone, this income earned abroad from that house property will not be taxable. From the 3rd year, he will automatically become a resident, an ordinary resident, and therefore it become taxable. Okay. Non-resident has income outside India, not taxable in India. Agreed. And income accruing or arising outside India from business controlled in India and profession set up in India, that is also not taxable for a non-resident. Is that okay? This is one thing. And then these are number of days for classification. I think by this time you should be aware of this calculation, the days concept. Okay, so I'll not go into that. We look at section 9. Okay. Income deemed to accrue or arise in India. Any income out of business connection in India, any income through or from any property in India, any income through. See, actually what happened is, at one point of time, they defined the word through. What does through mean? This was after a Vodafone case. I don't know whether how many of you all have read this Vodafone case. Very interesting. Vodafone International Limited. Okay, Hutchison Limited. Okay, and Hutchison SR was in India. Okay, so that is a very wonderful case. I don't know how many of you all read. It was directly related to section 9(1). It was a Supreme Court case law. Okay, in case you find time later on after the exams are over, you can go through it. It's an excellent one. Okay, and then you have 9(1). Any salary income, if it is earned in India, please understand, this is any non-resident working in India and he is rendering service on the Indian soil. The place of rendering service is India. Therefore, his salary income will be taxable in India. 9(1)(2). 9(1) clause 3. Any salary payable by the government to an Indian citizen for service rendered outside India. Suppose you are an employee of the Indian government, IFS, okay, Indian Foreign Service, you have passed out, and you are posted to the Indian Embassy in UK. You are an Indian citizen born and brought up here. Okay. And now you have been posted to the Indian Embassy in UK and you are a non-resident. Throughout 365 days, you are staying there. You are classified as a non-resident. However, the salary that you receive there will be taxable in India. This is point number 1. In point number 2, in case you receive any allowances, living allowances, okay, for staying there or perquisites, that will be exempted under section 10 subsection 7. So when you read section 9 subsection 1 clause 3, you should also keep in mind there is one section 10 subsection 7 which exempts living allowances or perquisites given for staying there. That will be exempted, not taxable. Section 10(7). Is that okay? Understood? Okay. Royalty payable. Okay. Any royalty payable is subjected to tax in India. Okay. For example, you have Coke, Pepsi, McDonald's, KFC. All these are foreign brands, isn't it? Foreign companies. They are operating through franchisees in India. The franchisee has to calculate royalty on every rupee of sale made by him in India, and that royalty has to be remitted to the foreign country to the non-resident company. That royalty is taxable in India. It is deemed to income deemed to accrue or arise in India. But then the government, so that is taxable in the government cannot go after the non-resident to collect the tax. Therefore, they shift the responsibility to the Indian franchisee, the person who's paying the royalty. He has to deduct tax at source, TDS, for which section 195 will govern that. Section 195 will govern TDS on payments to non-residents. On any payment to non-resident will be governed by section 195. Is that okay? And in case the rate of tax is 20%. However, if there is a double taxation avoidance agreement, and if that double taxation avoidance agreement gives you a concessional rate, then you can apply that, whichever is beneficial. That is given by section 90, but that will come to you when you read for your final. Okay, it's in the final syllabus, whatever is beneficial. But since we are touching about royalty, I thought I'll keep you aware that there is one section 195, which says TDS has to be deducted by whoever makes the payment. And one more section also related to this you should understand is section 40 clause A subclause 1. 40 clause A subclause 1, which says that if the person making the payment to the non-resident does not deduct tax at source, or after deducting does not remit it within the time limit, then the entire amount will be disallowed. Disallowance. This section 40 clause A subclause 1 will come under PGBP. The time limit is normally TDS has to be paid by the 7th of the succeeding month. Okay, suppose today happens to be 15th of October, and in case I'm making a royalty payment today, I have deducted TDS, then that TDS has to be remitted by the 7th of November. Okay, failing which interest will be levied. That is one point. Interest will be levied for non-payment, non-remittance of TDS within the time limit. However, for the purpose of section 40 clause A subclause 1, what they say is they are extending the time limit. They are saying the SSC, the person who's making the payment, has time to remit the TDS up to the date of filing the return, up to the due date of filing the return. Do you understand? Due date of filing the return. For example, if he's a businessman, 30th of September, okay, he has to file the return. He's subjected to tax audit. 30th of September, he has to file the return. Then he has got time for till 30th of September 2023. TDS was deducted on 15th of October 2022. The due date for filing return is 30th September 2023. Even if he remits the amount by that date, still it will be allowed as a deduction. Royalty will be allowed as a deduction for the previous year, 22-23. They still give you another extension. Even if he pays it beyond the due date for filing return, beyond 30th September 2023, even beyond that, if he remits the TDS amount, it will be allowed in the year in which it is remitted. For the previous year in which it is remitted, the royalty will be allowed as a deduction. Any questions you can ask me. If I'm a bit too fast, please tell me, I'll slow down. Because ultimately you will have to, the point lies in whatever I say, you should understand. Okay. So understanding is very important. Even very little we learn, still, if you understood it correctly, it will be better. Agreed, everybody? So this is regarding royalty. When I'm touching upon royalty, I've touched upon, we only saw section 9, subsection 1, clause 6, but I asked you to have a look at section 195, have a look at section 40, clause A, subclause 1 also. Section 90, I said, is just for information. You will read about that double taxation avoidance agreements and the rates beneficial. You read it in your final level. Agreed? Okay, this is, I thought I'll tell you about this one. I'll take you through to salaries. Okay, salaries, will skip through the chargeability sections and all that. And in case you have anything specific, you can ask me. Otherwise, whatever I think I should tell you, I'll let you know. As far as, okay, I thought I'll tell you about Keyman's insurance policy. This Keyman's insurance policy, you will come across in 3 places. Who gives, I don't know whether I have got it here. No, Keyman's insurance policy, not there. I'll tell you here itself. See, Keyman insurance policy is basically taken by the employer on the life of the employee. Okay. Now, why does he do that? In case the employee leaves the organization or he dies, okay, then there will be a reduction in the turnover. There will be a loss of profit. In order to safeguard against that, he takes a policy. Who pays the premium? The employer pays the premium. And how will that premium be treated? It will be treated as a business expenditure. He'll claim it as a reduction. And whenever the insurance company pays the amount on policy, on maturity or on death of that employee, the first person who can receive that money, the first person who has a right to receive the money is the employer only. And if the employer receives it, it is chargeable under the head PGBP under section 28. Okay. The first person who has got a right to receive the money is the employer. It is chargeable under section 28. If the employer is very generous enough, okay, if he's very generous enough, he'll say, okay, I don't want, and if the employee is alive, and the employer says, okay, I don't want the money, I will give the money to the employee who is alive. Then in the hands of the employee, it is taxable as salary. Now the employee is no more. However, the employer is very generous. He says, okay, I'll give the money to his family, the employee's family. In the hands of the recipient, okay, the legal heirs, it could be the wife, it could be the children, it will be taxable under the head income from other sources under section 56. So please understand, the payment under Keyman insurance policy, if it is received by the employer, it is taxable as income under the head PGBP. If that amount is received by the employee, it will be taxable under the head salaries. If it is received by any other person, it will be taxable under the head income from other sources. Is that okay? This is one thing which I thought I will tell you. And very difficult if I go through all the exemptions. The other one which I thought I should make a mention is, okay, you have, I think I'll go back to the basic section 15 chargeability 1 point. Okay, it is not here. I'll tell you now. I'll come some other slide somewhere else. In case the employer contributes to the national pension scheme, employer's contribution to NPS. Okay, if the employer contributes to NPS, okay, up to 10%, normally it is limited 10%. He can contribute any amount. Whatever amount is contributed by the employer to the NPS of the employee will be taxable as salary, will be includable as salary, after which it will be eligible for a deduction under section 80 CCD subsection 2. to the extent of 10% of basic. Do you understand? So whatever employer contributes to the NPS will be includable in salary. Later on, when you look at Chapter 6A deductions, there under Section 80CCD2, to the extent of 10% of basic, it will be allowed as a deduction. This is basically a tax planning advantage which is being given by the Income Tax Act, by the government. Okay, so that the money is saved for the future. Is that understood? Okay, so this is one thing which I thought. Anything other than that, as far as salaries is concerned, I think we will not dwell much into it, unless otherwise you've got specific questions on one more thing is this commuted pension. Okay, I thought I'll tell you something about commuted pension. This, you'll have to read this very carefully. If the employee is in the 1010A exemption, if the employee is in receipt of gratuity, 1/3 of the amount of commuted pension which he would have received had he commuted the whole of the pension. This is very important. Had he commuted is a hypothetical situation. If he had commuted, okay, he would have commuted only 20% or 30% or 40% he would have commuted, and for which he would have got some money. So what they're saying is, had he commuted the entire amount, how much he would have got? Out of that, 1/3 will be exempted. So this is very important. Very often the students make a mistake in this understanding this particular point, or in working out when they do a problem on this particular point. Okay, had he commuted, please be very careful. The meaning of this is different. You look into this, you will see here. See, if you look at this place, it says less exempt under Section 1010A, half of the full value of commuted pension as is not in receipt of gratuity, 30,000 into 100 divided by 60 into 1/2. That is how it is being calculated. Okay. So this is one. Apart from that, national pension scheme I was telling you about, house rent allowance and all should be easy for you all by now. And when you look at house rent allowance, 1013A, please understand when you're doing 115 BAC, if you're adopting for 115 BAC, these exemptions are not available. 1013A, all these exempted sections are not available. Is that okay? Okay. As far as house property is concerned, what else do you require? House property is concerned. Vacancy allowance is one thing. (23.5) property held as stock in trade. That is, if you're a businessman, real estate promoter, you're constructing and selling flats. Okay, constructing and selling flats or independent houses, you're building and selling, you're a businessman, you are reflecting the house property as your stock in trade in your balance sheet. Okay, in such situations, now how do you calculate income from house property? That is the point which is covered with 23.5. It says the property which is held as stock in trade has not been let out for the whole or part of the year. The benefit of nil value shall be applicable for the financial year in which the certificate of completion of construction is obtained, and for subsequent 2 financial years. That is, this was introduced basically when the real estate promoters were constructing 500 flats, 1,000 flats, huge, and they were not able to sell. When they were not able to sell, it was house property. So no income also is derived from the house property temporarily. In that situation, the income from house property can be taken as nil for the year in which certificate is received plus 2 subsequent financial years. Okay, example is given. If completion certificate is obtained in 18/11/21, the benefit under section 23(5) shall apply for the financial year 21/22 as well as for the financial year 22/23 and financial year 23/24. Okay, this is one thing which I thought is 23(5), where a businessman is holding it as stock in trade. Interest on loans, self-occupied house properties are there. Pre-construction period interest is there. This is, if it is a self-occupied, if it is a let out property, then any amount of interest will be claimable as a deduction. But as far as self-occupied house property is concerned, if the loan has been availed prior to 1/4/99, then the maximum amount that can be claimed is 30,000. And if it is taken on or after 1/4/99, then you can claim 2 lakhs. Okay, subject to a maximum of 2 lakhs. Okay. Arrears of rent. I think I'll move on to PGBP. Okay, this is one thing, major part of all the question. That first compulsory question of 14 marks will have PGBP in it. Okay, the first compulsory question has PGBP in it, and you cannot avoid. It's a slightly bigger chapter out of all the heads of income. PGBP is the bigger chapter, and as I told you, the first section 28 talks about chargeability, what types of income are chargeable, and then your deductions start from section 30 to 37 is the deductions. Okay, various deductions are there from 30 to 37, and then disallowances from section 40, capital A, 40 small a clause 1, I told you non-resident payments. 40 clause A, subclause 1A, payments to residents. Okay, where TDS is not deducted, 30% disallowance. Then you'll have 40 capital A, subsection 2, unreasonableness of expenditure. Then you'll have 40 capital A, subsection 3, cash payments exceeding 10,000 rupees in a day, disallowance. Okay, all these will be there. Then you'll have 40B, that will be salary to working partners. Okay, how much will be allowed, how much will not be allowed. So all that will be how it goes about. Okay, so this is section 28, chargeability, which tells you what it is. And this one is also important. Please understand, if you have business income, and it has to be distinguished between regular business and speculative business. What is a speculative business? Okay, if it is a transaction covered by section 43(5), section 43 subsection 5 defines a speculative transaction. What is a speculative transaction? Any business transaction which is not supported by actual delivery of goods will be a speculative transaction. And if you do that, it is a speculative business. Okay, shares is what comes to your mind, but be very careful. If I am taking delivery of the shares and selling it, if I'm treating, first of all, if I can treat shares as stock in trade, or I can treat shares as capital asset. If I treat shares as capital asset, I'll calculate capital gains. But if I am going to treat shares as stock in trade, and if I'm going to take delivery of the shares, it's a regular business income. If I don't take delivery of the shares, that is intraday trading. I buy in the morning, I sell it before the close of stock exchange on the same day. Then it is speculative business income. And what we are trying to say here is a loss from regular business income can be adjusted against a profit from speculative business income. Whereas the vice versa, if you have a loss from speculative business, that cannot be adjusted against a regular business income. It can only be carried forward to the next year, and it can be adjusted only against speculative business income. Is that okay? Right, give me a minute. Okay. So this is one point. Please try to understand. If you have any questions, if you have any doubts, you can get it clarified. This set of carry forward, you will read in set of carry forward provisions also. Okay, but here I'm bringing it here to tell you that the difference, why we are supposed to be very careful. Separate books of accounts have to be maintained for regular business and speculative business. Okay. These are all deductions starting from section 30, 31, 32, depreciation. Okay, depreciation is very important as far as PGBP is concerned. And here depreciation calculation is totally different from your normal accounting principles. Okay, here we have block of assets method. We have tangible assets, intangible assets, and all that. Okay, we have something called as unabsorbed depreciation. Okay. (43.1) is actual cost. For the purpose of calculating depreciation, what is actual cost? Then we have section 32 vis-a-vis section 50. That is two sections. One is in PGBP, one is in capital gains. Please understand depreciable assets. As far as depreciable assets are concerned, I have given you three cases in this. I'll just try to explain that. In case you have, in case one, if you see, I have classified as quantity and value. At the end of the year, if there is a positive quantity, okay, and a positive value, then depreciation can be calculated. You will have closing WDV. This is case one. In case two, there is a positive quantity available. Okay, three assets are there, whereas the value is negative. The sale value is greater than the opening WDV plus addition, so it's negative. Therefore, in that case, depreciation will not be calculated or cannot be calculated, and that 10,000 will be treated as short-term capital gains. Next year, when you carry forward, you'll have opening WDV, you'll have three assets. Value will be nil next year. Okay, in case three, the entire quantity is wiped out. The block is wiped out. The quantity is zero. In that situation, whatever be the resultant value will be short-term capital loss. Okay. So what we are trying to say is either section 30 will apply or 32 will apply. Depreciation will apply, or else section 50, that is deemed short-term capital gains or deemed short-term capital loss, will have to be calculated. Then we have 50A. This is for power sector undertakings. Okay, in case of power sector undertakings, please understand you have two options. Option A, one is you can go under the regular depreciation meaning block of assets method, or you can calculate depreciation for each machine individually. Straight line method of depreciation can be applied. If the assessee has to, basically the assessee has to tell his option to the department. At the time of filing the return, he has to tell what is the method of depreciation is going to adopt. Who is the assessee? Assessee is a power sector undertaking. If he says he's adopting straight line method of depreciation for each individual machine, then he has to calculate. In that situation, in case one, you will see that you will end up with a situation of terminal depreciation. Okay, you had opening WDV of 1 lakh. Now the opening WDV, that is at the time of purchasing the asset, then it has now after depreciation at the beginning of the year, it is 77,500, and that particular machine has been sold off for 60,000. So what do I do with the 17,500? Write it off as terminal depreciation. Actually, in the Income Tax Act, this word terminal is not there. They only say that whatever be the shortfall will be written off as depreciation. But to understand it better, we use the word terminal depreciation. In case 2, we find the sale value is more than the opening WDV. In that situation, you have a surplus. That surplus is treated as balancing charge. We call it as balancing charge, or you can call it as deemed business income under section 41. Under section 41, this 12,500 will be treated as deemed business income. In the third case, we have sold it for a value which is more than the opening WDV, and the surplus is 32,500. To the extent of depreciation charged so far, it will be treated as balancing charge, and over and above that, it will be treated as capital gains. If the asset is within 3 years, then it is short term. If it is more than 3 years, it will be long term. Okay. These are various sections for scientific research, capital expenditure for specified business, rural development program, etc. As far as scientific research is concerned, okay, so I think, okay. I'll do one thing. Okay, where is it? Not able to get that. Okay. The screen is not sharing. Okay. We'll come back to this afterwards. Okay, we'll go through this itself.
Now screen came.
Yeah, now screen is there, no? Okay. I just wanted to take an example. So what do I do with the 17,500? Write it off. Which 17,500? You are asking about the depreciation one?
No, sir. Sorry, sir. No, sir. Nothing.
No. Okay. I'm just searching for a. This is not sharing. Okay.
Presentation is visible.
This question paper is visible?
No, sir.
No,
You
no.
can try share screening option.
Yeah. Now visible?
Yeah, now visible, sir. Yes.
Yeah. Okay. Now, what I'll do is we'll just have a look at this example. We'll go through this. Okay. From the given information, you're required to compute the tax payable of Mr. Akash, a manufacturer distributor of fertilizers. You have opening stock, purchases, direct expenses, freight inward, gross profit, sales, closing stock, salaries and wages, general expenses, rates and taxes, interest paid on late payment of GST, income tax paid for financial year, interest paid to NBFC, depreciation, net profit, gross profit, dividend income, interest received on FDs, net of tax, by rent received, income tax refund. Closing stock is been undervalued by 25,000. Rates and taxes include 1,000 paid towards late filing of his income tax return for assessment year 21-22 under section 2234F. Okay. Salaries includes 15,000 paid on a single day by way of cash to his accountant. Section 40A3, disallowance. Okay. Fine paid will be coming under your 37. Okay. Explanation to section 37. Any fines, any penalties, etc. will be disallowed. Okay. Interest paid on loan taken from non-banking finance company. Out of the loan, 2 lakhs was used for personal purposes. So whatever is used for personal purposes is not allowed. Section 37 says so. So that portion of it. An amount of 45,000 was paid by check during the year towards health insurance policy covering himself, spouse, and his children. So personal expenses. General expenses include advertisement, 20,000 paid by check towards advertisement souvenir published by local political party. Local political party, section 37, subsection 2B says any advertisement in a souvenir, handbill, etc., will not be allowed as a deduction. Income tax includes 2,000 towards interest. Income tax itself, income tax refund. This 2,000 will be towards income from other sources. Income tax refund. So this 2,000 will be taxable as income from other sources. Depreciation charge as per income tax rules, however, does not include depreciation Maruti van purchase and put to use the cost of the vehicle. So you'll have to provide for that. Advance tax paid for the year, turnover for the year ending. Mr. Akash does not want to opt for the provisions of 115 BAC, 14 marks. Okay, so this is basically a question where they're asking you to compute the income and the tax payable, who's a manufacturer proprietor. Do you understand? Income from house property. You have annual value 7,20,000 less 30% deduction. Profits and gains of business or profession. You have the disallowances, add back. What are all added back? Late fee filing, disallowed. Salary paid to accountant, cash exceeding 10,000, disallowed. Interest paid to NBFC on loan which is used for personal purposes, disallowed. Okay, interest paid to NBFC which is on which tax is not deducted at tax, disallowance of 30%. This is coming under section 40, clause A, subclause 1A, which I think I told you, 30% disallowance. And there also they will say that in case you don't want this disallowance, you'll have to get a certificate from a chartered accountant Okay, that the person who received the amount has shown it as his income. He has filed the return within the due date and he has paid the taxes. And this has to be certified by a chartered accountant. And if you're able to provide that certificate, then this disallowance under section 40, clause A, subclause 1A will not apply. Okay. Then you have income tax paid not allowed. Section 40, clause A, section 40, clause A, I think subclause 3 says that income tax, wealth tax will not be allowed as deduction. Okay, now we don't have wealth tax, but still says so. Interest paid on late payment of GST allowed since it is not an infraction of law. This was earlier case laws were there in sales tax. The same thing is being carried forward now. So interest paid for late payment or for arrears, etc., there is no disallowance. It is not in the nature of a penalty. Advertisement expenses towards the advertisement in souvenir published 37(2)(b) disallowed. Add undervaluation of closing stock. Less from the credit side of the P&L, dividend income from Indian companies. This is separately taxable under the head other sources. Interest on FD taxable under the head other sources. Rent received taxable under the head income from house property. Interest on income tax refund taxable under the head other sources. Okay. Less depreciation motor car, which was not included in that depreciation calculation. Now we are allowing it. Then we have income from other sources, gross total income. Less deductions under chapter 6A. And you have total income. And the computation of tax payable under the normal provisions. Now, anybody has got any doubt in this? In understanding this, you can ask.
Actually, next session is postponed at 15 minutes. So we
Okay.
have 15 extra minutes. If
Okay.
possible, we can take till 4:15.
Okay, if required, I'll take that.
Yes.
Only thing is, I don't find any response. I also have another appointment after that. So I'll just see. Okay, I'll let you know.
Fine, fine. Yes.
If anybody has got any questions, any doubts, please put forth. You've got, I was just explaining, it is becoming more monotonous because I am doing monotone. No? I am doing the.
Actually, they are posting a recorded session of this also. So students will be seeing recorded session also.
Fine, fine, fine. Yeah. Okay. Anybody on live, you can ask me questions, right? So this is as far as your PGBP. We've got another half an hour now. It's 3:30. Okay. I'll pick up capital gains. In capital gains, I will look at 45.5. 45 subsection 5, I'll look at. Not 45.5a, sorry. 45.5a. Transfer of land or building or both by an individual or HUF by way of joint development agreement for development of a project. That is, a real estate promoter wants to promote. I am an individual. I own land. I am giving it to the real estate promoter and a joint development agreement is being entered into. And if that joint development agreement is registered, it is called as a specified agreement. Okay. Now, in that situation, previous year in which possession of land, year of transfer, or both is handed over, year of transfer. This was a case where the joint development agreement is not registered. If it is not registered, then as per section 53A, see, please understand there are two options available. One option is to register the joint development agreement. The other one is not to register. In case I do not register, I am handing over the land to him. He is building it and then he is giving me some constructed area and he is going to sell the balance and is going to give me some money. In that situation, the year of transfer is previous year in which the possession of land or building or both is handed over by virtue of section 53A of the Transfer of Property Act. Year of chargeability is the previous year in which certificate of completion or whole or part of the project is issued by the competent authority. competent authority in Chennai, we have Chennai Metropolitan Development Authority, CMDA. Okay. Then stamp duty value of his share in the project on the date of issue of the certificate of completion, that will be treated as sale consideration and in addition to any money received. Okay. This is one thing which I thought I can tell you. 45.5a. Questions can be asked. Please try to concentrate on 45.5a. Then we have cost of acquisition in specified cases. A number of cases are there. Okay. I will go on to exemptions. Manjula Jesha's case is one other thing. Here, what happened is, if you read section 48, the second proviso, so to section 48, it says that the actual cost, okay, from the will be to the SSC from the first time the SSC held the asset, the cost of acquisition, first time SSC held the asset. Now I'll give you an example. Listen, in case my grandfather or say my father purchased the property in say 1970 and I inherited the property in 2010. Okay. And I am selling the property in 2020. Then as I am the SSC, I first held the asset in 2010. So the indexation benefit will be available to me from 2010 to 2020. Okay, this is as per the second proviso to section 48, indexation benefit. However, there was a case law called as Manjula Jesha's case, and they said this benefit should be available from the time my father held the asset. Okay, the previous owner. So in case my father had held the asset in 1970, then today he would have been eligible for indexation from 2001 only. 2001 onwards, 2001 to base point is 100. Okay, the same benefit should be available to me also. That is what this case law says. Okay. Now issue is the Income Tax Act still continues. As per the second proviso to section 48, indexation benefit is available to a long-term capital asset from the first year in which the SSC, from which the asset was held by the SSC, up to the year of transfer. This still continues. So in the examination, if you want to adopt Manjula Jesha's case and work out the problem, please give a note that you have worked out the problem as per Manjula Jesha's case. And you are also aware that the second proviso to section 48 says that indexation benefit is available from the first time SSC held asset. Agreed? This was a decision in the Bombay High Court. The citation is CIT versus Manjula Jesha, 2012, 318 ITR, 417 Bombay. Okay. This is regarding indexation benefit. The section 50 I've already told you regarding depreciable assets. 50A is with respect to the power sector undertaking depreciable assets. 50B deals with slump sale. Okay, slump sale is sale of an undertaking as a whole. Sale of an undertaking as a whole. This is how it was there. Okay. Now they have made a small change in the Finance Act 2021. They made a change, and there is, as a result of the sale, no, that word they have removed. As a result of transfer, they have said. So even other than by way of sale, if there is a transfer of assets and it is by way of slump sale, then how it is to be calculated? You'll have to take the fair market value of the assets. Okay, that is what they have said. So they have made a small change in this definition of 242C. Okay. So that is one thing that has to be taken into account. Transfer of immovable property, 50C. I did not say one thing similar to this. Similar to section 50C in capital gains, you will have section 43CA in PGBP. In PGBP also you have 43CA. Okay, and in capital gains you have got section 50C, transfer of immovable property. Okay, here they say in case the guideline value, okay, you will have to compare the guideline value and the sale consideration. And in case the guideline value is higher than the sale consideration, you have to adopt the guideline value for the purpose of computing capital gains and for the purpose of PGBP. Only thing is now what they have done is they said earlier there was a 10% variation allowed. Now it has become 20%. So however, if the variation is not more than 120%, you can still adopt the actual sale consideration for the purpose of computing capital gains or for the purpose of PGBP. Agreed? Here I've given 110%, it should be 120%. Okay. This is for unquoted shares. Exemptions. 54 is one exemption. Individuals HUF. Okay. And here basically it says say transfer of a residential house property being a long-term capital asset, income from which is chargeable under the head income from house property. And in case you replace that by buying another asset, another residential house property, then you are eligible within a period of 2 years, or constructing it within a period of 3 years, then you're eligible. Earlier, it was only one residential house property. They made a small variation once in the lifetime of the SSC. If the sale consideration capital gain does not exceed 2 crores, the SSC made his option purchase 2 houses. This is the advantage they've given, but this is available only once in the lifetime of the SSC. And the quantum of exemption, cost of the new residential house or capital gain, whichever is lower. 54B is when there is an agricultural land. Urban agriculture only is a capital asset. Therefore, only then this whole thing will come into picture. If you're going to sell a rural agricultural land, it is not a capital asset. Therefore, it will not come under this. Okay, capital gains. Definition of capital asset is governed by section 2, subsection 14. So if the agricultural land is an urban agricultural land and if it has been used by the SSC or his parent for a period of 2 years immediately preceding the date of transfer for agricultural purposes, then you are eligible for exemption provided you are buying another agricultural land. Okay. How long the new agricultural land should be held, they have not said. That is in case it's should be held for a period of 2 years, but in case it's there is a small tax planning possible in 54B wherever you purchase a rural agricultural land. 54D is available for any SSC. Okay, there must be compulsory acquisition of land and building or any right in land and building forming part of an industrial undertaking. In that situation, if you are going to compulsory acquisition, please understand, under any law. And in case the SSC acquires another land and building and shifts his business, carrying on his business there, he is eligible. 54 EC is for those people who do not want to reinvest in immovable property. They can invest in bonds. Okay, the period is within 6 months, they have to invest in bonds of RECL, NHAI, etc. which is redeemable at 5 years, you may get interest. That interest is taxable under the head income from other sources. Okay. The assessee shall not transfer or convert or avail or take any loan. In this situation, is eligible to claim the benefit of 54EC. Here in this problem, a combination of exemptions are being availed. 54EC, 54EC, 54EE. This 54EE and all that was basically a limited period offer. Okay. For those houses which were being sold during a particular period, with a particular amount, does not exceed, etc. It was there. It has again come back as EEA and all that. Okay. 54F is for when you sell a commercial property, when you sell jewelry, any asset other than a residential house, then you can claim 54F. Here, the quantum of exemption is different. It's a proportionate exemption. Okay, proportionate to the amount of investment that you have made, it will be eligible. Extension of time limit, etc. This is capital gains. Other sources. Here, the most important section is 56. And in 56, we'll look into 56 subsection 2, clause 10. This is regarding deemed dividend. I hope you're all aware of deemed dividend, where you have shares of a closely held company. What is to be done? I look into 56 subsection 2, clause 10. Okay. Here it says sum of money without consideration. The whole of such sum, if aggregate exceeds 50,000, somebody gives me a gift. Okay. On my birthday, 3 or 4 friends of them put together and they give me 75,000 rupees. Then this entire 75,000 rupees will be taxable. Immovable property without consideration. Stamp duty if it exceeds 50,000. Inadequate consideration if it exceeds 50,000 or 10% of consideration. Now that is 20%, they have said 120%. Movable property. Aggregate of fair market value if it exceeds 50,000. We'll have a concept of relatives. Exemptions. Exceptional cases where tax bill does not arise if received from any relative. Who's a relative is a separate definition. On the occasion of marriage, if you receive anything not taxable, who should receive? The bride or the bridegroom should receive, not anybody else. Under a will or by way of inheritance, in contemplation of death of the payer or donor from a local authority, any foundation, etc., referred to in section 1023C, from or by a charitable institution registered under 12A. You have a number of items here. Okay, relative definition: spouse of the individual, brother or sister of the individual, brother or sister of the spouse of the individual, brother or sister of either of the parents of the individual, lineal ascendant or descendant of the individual, lineal ascendant or lineal descendant of the spouse of the individual, spouse of the relatives listed in number 2 to 6. C. My father's brother is my relative. My father's brother's wife, my uncle's wife, aunt, is also my relative. But my father's brother's son, my cousin, is not my relative. For this purpose, please understand that. So like that, you'll have to understand, give examples and understand who are all relatives. Only then you can arrive at exemptions. What is exempted? I've just given examples here. In this, I'll just pick up one thing. Purchased diamond ring for 5 lakhs from Kirtilal Kalidas Diamonds, a registered dealer, the fair market value of which is 5,60,000. That is, in the tag, there is a price tag. The price tag says 5,60,000. I bargain with him and purchase it for 5 lakhs. You cannot say that the difference of 60,000 is taxable in my hands as gift. It is not taxable in my hands as gift. Is that okay? Now, gift of immovable property from his friend, the value of which is 20 lakhs, that will be taxable. I've just taken 2 points from that and try to look at it. Okay. Now, other than this, if you have anything in as far as TDS is concerned, we have various sections in TDS, starting from 192 for salaries onwards, 194C contract payments, okay, 194B is on lotteries, etc. And 196Q is one where your purchases of more than 50 lakhs, you're supposed to deduct 0.1%. And you'll have to look at 196Q, compare it with 206C 1H, TCS provision. Okay, TCS provision, tax collected at source from the seller. Either one of them only will apply. Both will not apply. 206C 1H is TCS applicable by the seller. 196Q is by the purchaser who makes the payment. In both, the quantum, everything is same. The amount of deduction is also same. Either one of them will apply, both will not apply. So we'll have to get a declaration from the other person. Whoever deducts, the other person need not deduct. This is one point that you need to keep in mind. Okay. Now we have got the last 10 minutes. We have reached. Any questions, please? Anything that you wish to ask? Yes.
1 second, sir.
Hemant, any questions?
Am I audible, sir?
Yeah, audible, Hemant.
Yes, sir. So, from the audience, YouTube, there is no specific question. They have said, "Good afternoon, sir." Some people have responded, "Good afternoon, sir."
Good, and, thank you.
Actually, I had one question, like how to remember all the TDS percentages. Like there are many sections in TDS, and it is actually a little difficult for me to remember each and every percentage.
No, Hemant, it is only like this. See, it is, for example, if you remember a dialogue from Rajinikanth's movie, which was released somewhere about 10-20 years back, you're able to recollect it even today, isn't it? Yes. A film like Basha. Yes. Why is it so? You never mugged up the dialogue.
Yes.
You have got involved with it. Yes. So it's become part and parcel of you. So yes, what I'm trying to tell is, see, suppose we say, okay, tomorrow if I get a lottery, what will be the TDS after which I'll get 30% straight away. Okay, I have not got any lottery. I have not won any lottery, but still you give an example and say, in case I get a lottery, how much will I get? Will I get 1 crore? No, I won't get. I'll get only 70 lakhs in my hand. Okay, you're doing business, 194C contract payment is there. In case you're an individual, 1% I will deduct. Not an individual, I'll deduct 2%. Okay. And in case you've got a foreign payment, for a foreign payment, 195, 20% you're going to deduct. Okay. Actually, 195 does not give you the specific rate. If you for a final level, you will be reading. There is 195 does not give you a rate that is to be deducted. You'll have to go and refer to section 115A. 115A will give you a rate for royalties, how much, for technical know-how fees, how much, for interest paid to non-residents, how much, all that will get a rate there. Okay, 195. You go on to your 194I. Okay, 194I rental payments. In case it's for machinery, etc., 2%. Other than machinery, if it's for building, etc., it's about 20%, isn't it? 10% or 20%? Hemant, 194i.
194i. For rent, it is 10%.
10%, correct.
Yes, sir. Yes.
Machinery and all, it is a 2%. Correct.
Yes.
So suppose I'm hiring an earth mover. If I'm hiring an earth mover, it will come under 2%. Okay. So like that, it is only, we give examples and we are not mugging it up. If you mug, that's what I said for the sections also, section numbers also. Difficult to remember if you are looking at it like trying to look at, give example as part of your daily life. Okay. As part of your daily life, whatever you do, give examples and then try to imbibe that. No, only then it will stay with you. That is how it is.
Correct. Thank you for that tip, sir.
Yeah,
I will
yeah.
actually follow
Anything,
that.
anything that you see as you go around. 1 second. 1 second. Sorry, there was something urgent. So like this is how we calculate and or we try to remember. Okay. When you go out, whatever you do, whatever, wherever business transactions that you do, just try, look at the implications. Suppose you go to KFC, okay, just don't enjoy the chicken or the burger that you eat. Look at the taxes that he's going to pay. Then you get, when you get a bill, what is the royalty this fellow is going to pay? If he's going to pay royalty, where will it be taxable? Who is supposed to pay the tax? Should the non-resident file a return of income? So if you just think about it, you'll remember it. That is how it happens. Okay.
Yes.
Yeah. Anything else? Any other questions? Anything else that you would like to know in the original? Yeah.
No, sir, you can
Yeah. So this is what I thought within this 2 hours, whatever you could rush through, I did try to rush through. As far as exams are concerned, one more thing is all your suggested answers for the last 4 exams, all the RTPs, mock test papers, you will have to work out. And you should have a clear-cut time. See, there are people who keep saying, sir, I started reading salaries. For the last 1 week, I've been reading and it's still going on. I don't know when I'll complete. And you're telling there are so many chapters to be read. How is it possible? See, this is for people who don't have a definite plan. You should have a definite plan that you have to complete salaries within a period, a matter of 3 hours max. So for each chapter, the time available is so much. And you cannot read like a retired person reading Hindu newspaper from the first page, starting your left, top left till the last page, right, bottom right. You cannot read income tax. That is not possible. You won't have time at all. You will have to pick and choose the important areas meaning what is the essence, which you should have already done earlier. The critical point should have been jotted down somewhere, and the time limit available, okay, for this particular 100 hours, total of 100 hours for income tax. That's all, because you have other subjects also to be covered. So within 100 hours, you're supposed to have covered everything. Try to distribute it. 100 hours meaning, suppose you take about 4 to 5 hours per day, or within that you have to finish off this particular subject. You cannot, otherwise this will be never ending process. Okay. So there has to be a clarity on what we are doing, how we are doing, how we are going to present it. If you are not very clear on your concept, okay, you'll be wasting time in the exam. Okay, which is very, the pressure will build up because you make a mistake, you start thinking in the exam that this is correct or that is correct. All that will build up. So your clarity of mind is very important. Your strength should be in your acquiring knowledge. Okay, which should be really sound enough. That is what is very important as far as income tax is concerned. In the examination hall, you cannot do a permutation combination that this is right, that is right, and then not possible. And please don't do that with the multiple choice questions also. Don't play around with the multiple choice questions. Try to pick up those 2 marks each. For each small question, 2 marks. They give you 18 marks, I suppose. Okay, 18 marks for this, and for descriptive questions, 42 marks. Okay, so this, in case your concepts are clear, you can complete those 18 marks very fast. Okay, for each mark, you've got around 1.8 minutes. So 18 marks, you've got about, say 40 minutes, 36 minutes. Okay, you don't even require the 36 minutes. If you're very clear, you can finish it off in about 10-15 minutes, you can finish it off. So that much amount of time will be saved for your descriptive questions. And descriptive questions, please don't have scratching, overwriting, etc. Before you start the answer, before you put your pen to the paper, have conceptualized what you're going to do, how many columns you require. You require 3 columns. Definitely an inner column is always required, okay, for workings. Description, inner column, outer column. Try to work out. Otherwise, put a note and work out a note. Okay, note 1, note 2, note 3. And see, when somebody reads your paper, they will know whether you are confused or whether you have clarity the moment they see the paper, the way you have written the answers. So as far as possible, please avoid overwriting, scratching, etc. Okay, that will not give a correct picture at all. So this is what I thought I can tell from my experience. So with the students.
There is one question actually.
Yeah, please.
Dilip Kumar have asked my question.
Yeah.
He said, "Good evening, sir. Can you please say the order in which topics are to be revised before exam day?"
Before exam day, okay.
Yeah.
See, one group is heads of income. Salaries, house property, PGBP, capital gains, other sources is one group, one set of section, one set of chapters. Okay. And in that also, what is the time taken? The day before the exam, if you have got about 24 hours time max, you have got, max is 24 hours time you have got. You cannot spend the entire time for this. You can spend about 4 hours for these heads of income. Okay. 4 hours for these heads of income. How you're going to split that? So house property can be hardly half an hour, 30 minutes, more than sufficient. Other sources can be hardly 30 minutes, max 30 minutes. Okay. 1 hour. So salaries can be 1 hour, 2 hours. Business income and your capital gains can be 1 hour each, 4 hours. Okay. So this is, you should have a clear-cut time limit. And then you have your, first you have your residential status, scope of total income. You have half an hour. Okay. Residential status, scope of total income, and section 9. That is one group, the first initial group. Okay. And then you have got your clubbing provision, set of carry forward, chapter 6A deductions. This you can spend about another 1 hour. Okay. And then you have got return of income, advance tax, interest 234 ABC interest, advance tax, and return of income. That can be another 1 hour. So you have arrived at something like around 8 hours or 9 hours, which you can always extend it further within the time limit available. But be very clear on what you're going to do on that day. Okay, on that day, A to Z, you cannot read, not at all possible. And my advice is go to sleep early, get up by 6 o'clock in the morning, go to sleep by 9:30, 10 o'clock, go to sleep. Don't sit till 2 o'clock and all that. 10 o'clock, go to sleep, have a good sleep, get up at 6:30, and then go for your exams. Okay, because last minute, nothing great can be done. Whatever you have done now, the whole thing lies in recollecting in the examination hall. Those 3 hours, what is it that you can recollect? And that is possible or dependent on your clarity of mind. Very, very important. Is that okay?
Yes, sir. Yes.
Yeah.
Thanks for the tips, sir.
Yeah.
So the order which I understand this, we have to go as per ICAI book order itself, right, sir?
Yes, yes, yes.
Yes.
Don't mix up. Heads of income, keep it as one group.
Yes, yes.
Because your major part of 60 marks goes into that.
Got it. Yes.
Very important. Without that, nothing else will work.
Yes, sir. Yes, sir. That's questions are that's all. Dilip
Yeah.
said thank you. Yeah, I
Yeah.
think we are satisfied his question.
Thank you. Thank you. Yeah.
Yes, sir. So
See, whatever possible, I've tried to do it. Okay. But as you know that this can, it can extend to hours and hours together.
yes, sir.
Yeah.
Income tax is like
It's very, yeah, it's a notion. It's very interesting also.
Yes.
If you get involved, then it's very interesting. If you don't get involved, it's not interesting. You'll run away.
Yes, sir. Correct. So yeah. So if you have anything, you can continue, sir. Or the next session will start after 10 minutes only. The faculty is traveling, so he said it will take some time.
Okay. I think I have another ISO audit is going on, so I'll have to be part of it. So I'll have to go there. Okay.
No problem, sir.
Thank you, everybody. Wish you all the best. All of you all, wish you all the best. Do your best, and hope to meet you all in the final.
Thank you so much, sir. Thanks for the wonderful session.
And Hemant, you're doing a final. Would like to see you as a chartered accountant. Okay.
Yes, next year I'm writing the exam.
Yes, as a professional colleague, would like to meet you.
Thank you so much, sir.
Okay, thank you, everybody. And thanks to Sikasa for having arranged this session for the benefit of students. Thank you, Hemant.
Thank you, sir. You can leave from the meeting, sir. I will wait in the same room.
Okay, fine.
Yes.
Yeah.
Students, next session will be starting 15 minutes delay. We have planned for IDT class from 4 o'clock, but it will start from 4:15. So we can take a break of 10 minutes, 10 more minutes. I will let you know when the faculty joins the session. Thank you. Good afternoon, sir.
Happy afternoon, my dear. Thank you so much for your wait.
So can we start, sir? I will just
Yes,
give
yes.
an introduction.
No. I'm setting up myself. You can start. No issues.
Yes, sir. Thanks. So I would like to welcome Sitaraman, sir. So he will be taking marathon session of indirect taxation of intermediate, CA intermediate paper 4, part B. I would like to introduce him to our students. Sitaraman sir is a practicing chartered accountant. He is a founder partner of S. Sitaraman and Associates with a domain expertise in indirect taxation. Sir is having got more than 10 years of experience in teaching. So we will be getting a lot of knowledge from him. He have completed post-qualification certification course on indirect taxation. Sir have been a faculty for GST certification course conducted by Committee of Indirect Taxation of ICAI, and he is a corporate trainer of on GST impact and implication. Sir is also author of books, various books. One of the book is Indirect Taxation Made Easy, that is made for CA, CMA, and CS, both for inter and final. Sir have been author for the book. He is a resource person on various topics on GST and indirect taxation topics for Central GST Excise Audit Committee, CII, RTI of RBI, TNGST, Commercial Tax Staff Training Center. He is a resource person for various topics in GST for TNGST, Commercial Tax Staff Training Center. He is also visiting faculty for various branch of SIRC of ICAI. So I hope we will be getting a lot of knowledge from Sitaraman sir. So I would like to hand over the session to you, sir.
Thank you so much. Thank you so much, Hemant, for your full and kind introduction. I thought you'll be giving a very crisp. Nevertheless, thank you so much for the time. And I'm getting into the session, my dear, straight away. My dear brothers and sisters, we are into very purposeful 2 hours. Probably, I'm sorry because I'm in a travel. I'm not able to switch on my video. So hope you can manage without my face being there. What is more important is the purpose and the content. Guys, 2 hours. I want to take you through on the important amendments which has happened for November 22 examination, point number 1. And point number 2, how to focus for the examination. A day before examination, how I have to take over the strategy towards covering indirect taxation, right? So that's a whole thought process. We will be, for the amendments, and second priority is to ensure that we are having a right approach towards the examination, right? And before I start, let me thank SIRC at the outset and SIRC for the entire coordination of this event. I could not even recollect any one education institution doing this kind of favor on the 11th hour towards the student and for the well-being. So my heartiest congratulations, and guys, these are something which we have to take forward to the next generation as well. Keep doing this good work with a lot of betterments, and hats off to the entire SIRC and SIRC team for making such a platform, making the last minute focus point to the, our beloved brothers and sisters. My dear, let's start the amendment area straight away. There's no amendments in chapter number 1. So I'm taking you through chapter number 2. Straight away, supply amendment has been there in the scope of supply, introducing section 7(1)AA, a new section. But this provision is basically a clarification in nature. This is not bringing in new scope into the picture. This particular clarification is warranted because of the judgments we have received in income tax, because of the judgments we have, ancestral precedents we have set in service tax and in income tax. Those ancestral laws was the basics, and that necessitated, because even though it has been 5 years into the GST, people are not able to understand GST is a new law. When something is defined in the respective law, we have to go with the respective definition, and you can't arm twist and shed crocodile tears based on a past track record. How we have been doing so, how we have been doing so. No, that's not required. When there is a change, first we have to accept the change. See, look at the way we have been conducting the classes. I pull my hat, collars and say, hats off to SIRC and SICASA. Look at this. Previously, all these sessions used to happen only in Brahmaya Hall, physical manner. And what is that, sir? Only those who are in the Chennai will be able to attend. Now look at this. Pandemic came, we never went into our shell. Rather than we reached out to the mass in a greater manner, we are going everything in online. Today, people sitting across South India is watching this program. You're recording this in a YouTube. Technology, see, we are changing, we are adopting. But what is required, sir? Change mindset is very important. You have to go with that, mindset. If not, then things will not happen properly. And here is one example. Because of the resistance shown by the people, industry, trade, and practice, and because of the crocodile tears shed, government was forced to bring in a clarificatory amendment with retrospective effect. What they have done, sir, right from the day one of GST, there is no doubt services provided by the club no second thoughts on this. But, however, lot of people who shed a crocodile tears saying that look at income tax, look at section 28, it talks about the mutuality, principles of mutuality. When the service has been provided or any supply has been made by the club to its members or members to the club, it should not be called as an income at all. See, that's an income proponent theory based on income tax. But that's not the case with consumption theory. You can't extrapolate one income theory fundamental to one consumption theory fundamental. Both are two different horizons altogether. In consumption theory, anybody consumes anything. If it is not exempt, if it is not specifically outside GST, it is subject to GST, because we are doing in a comprehensive manner taxation here. So under the comprehensive manner, law very clearly says club and members are considered as two distinct persons. Look at definition. For the purpose of this class, it is hereby clarified that notwithstanding anything contained in any other law for the time being in force, or any judgment or degree or any other court order or tribunal or any authorities or why this wording has been incorporated, sir? Because we have a number of judgments in income tax, we have a number of judgments in service tax, central excise to say club and its members are one and the same. It should not be considered as a two different party. Therefore, they will be outside the scope. But that's not the case with GST. GST has brought in clarity. It's a consumption-based tax. When club provides a service to the members, members are consuming. Everybody, my dear. Therefore, it very clearly said the person and its member or the constituent shall be deemed to be two separate persons. So they have put a full stop. They brought in the deeming fiction and they have put a full stop saying that both are two different persons. Buddy, you can't say this anymore. Therefore, it becomes taxable. It becomes a supply. So it has put an end. So corresponding relaxation or corresponding correction has happened where, sir? The corresponding correction happened in Schedule 2, Para 7. There is a corresponding clause which says that, deemed to be supply of goods. Now they have reversed it. Now they have removed it. Reason why is a retrospective effect 1/7/2017 onwards? Because the above amendment 7(1) AA was also a retrospective effect with effect from 1st of July 2017 itself, my dear. The day GST was introduced, it is deemed to have been there. It is deemed to have been there. That is how the law perceives. Everybody, my dear brothers and sisters, I'm sure with this, you will be very clear. 7(1) AA is not adding a new scope, but it is just giving you the clarity. It is just giving a clarification to ask us or to enlighten us to treat members and the club, which is called as constituent, are one and the same. There is no distinction point here. Everybody, my dear. So that's first amendment with respect to chapter number 2. And here I go with chapter number 3. And before I proceed into chapter number 3 and furtherance, I give a clear disclaimer to all of you, my dear. See, being a member of practice, I follow notifications, I follow circular, and I am not following any other, recommendations. Sir, why you say so? See, for examination of November 2022, Chartered Accountancy, all the amendments made, all the amendments brought effective up to 30th of April 2022 was effective. It's applicable for the exam 6 months before. So I go with that thumb rule. I will not actually, go otherwise. Therefore, all the amendments as far as applicable. Sir, why? There will be some time wherein some of the amendments given in the statutory update of yours is not at all applicable. I will not consider that. And they have also repeated the old amendment. I will not consider both. Whatever is freshly added for your examination, I am considering only that. I'm not considering anything new, right, my dear? So let's go ahead and cover up chapter number 3. There is an amendment with respect to e-commerce operation. My dear brothers and sisters, please understand e-commerce operation scope has been increased. If you get to know this, more than sufficient. You need not break your head. What is the scope, sir? Any transportation of passenger service by roadways, any transportation of passenger by roadways, it is to be included. Any transportation of passenger service by roadways, it is to be included into the, right? It is to be included. Any transportation of passenger service by roadways, if provided through e-commerce operator, that comes in the scope of 9.5. Similarly, restaurant services provided through e-commerce operator, that particular e-commerce operator is deemed to be the service provider. That e-commerce operator is deemed to be the service provider. My dear, so this is the true clarity, sir. Whether we have to read all these circulars, details, no, my dear. This I have given for practical clarity's sake. Okay, so I don't want you guys to go through, because in your institute ISM this is not covered. Okay, but being a member into practice, or being a person who is handling session for all the 3 streams, I'm updating and I'm just keeping it ready for myself. And please, my dear, you just get to know there is an amendment happened. Scope has been increased. 9.5. E-commerce operator specified services are not 3. Now it has become 4 with enhanced transportation of passenger scope. With enhanced transportation of passenger scope, you just have to keep this back of mind, right, my dear? Then comes composition scheme, chapter number 3. My dear, are you able to follow me? Am I going very fast? Guys, you can also participate. You can also have your questions on. Your questions are also most welcome. If no question is there, and if at all you feel I have to go slow, you please be on your voice. Okay.
Yes, sir, this is fine. Questions are posted in YouTube. I will let you know if there is any question.
Okay, ma. Thank you so much. Hey guys, I give kindly pardon me. I'm in a travel. Sometime network might drop, so that's the only impediment while traveling and having a session. And this is my first experience of taking a class when I'm coming on the road itself. So previously I used to halt anywhere and I used to take, but today I'm left with no choice. I've been doing this. So when there is going to be any drop, kindly manage it. Kindly tolerate that for me. Okay. Please, let's go for next one. Composition scheme supply. Mute it. Mute. In the side. Panale mute. Okay. Composition scheme supply. When we go ahead with, my dear. Previously, any person who is into the manufacturing of specified goods is not entitled. Any person who is into the manufacturing of specified goods. In the road, okay, guys. See, composition scheme. Earlier, it's only iPad goods, ice cream, pan masala, aerated tobacco, aerated waters, and tobacco and manufactured goods. See, what is this? Basically, cancer-causing products. So previously, this was the mindset. Sir, what all are cancer-causing? What do you say? Yeah, my dear, all are cancer causing. There is no second thoughts here. Pan masala, tobacco, I'm sure you'll be aware of that. It's a, you know, it's open drainage. That's it. Inside open drainage. You have to turn in the side. Sorry, guys. Space. So, pan masala and tobacco, I'm sure you'll be aware of. But ice cream and aerated waters also, I'm telling you, what is aerated waters? The so-called very popular, we used to call cool drinks. Huh? That cool drinks is what very, very, dangerous one. All are the original name or the scientific name of those is called as carbonated waters. Please don't have those things. To be typically, all my brothers and sisters who have attended my session, they will be aware of. We have the habituation of calling the aerated waters as toilet cleaning acids. Okay, don't do that. And ice cream is not probably ice cream only except gulfi. A gulfi which has been gulfi ice which has been made only out of milk. That's the only exception. Balance all I used to call them as petrochemical products. And petrochemical which is used for cooling down the car radiator has been used there. So please don't have all those things. These are having multiple impediments on our health. Please don't do. It causes your fertility also. Please don't do. So just get away from all these, modern day Western inflations. Get rid of all these things. Sir, instead of cool drinks, what can I have, sir? You can have juice, you can have buttermilk, you can have tender coconuts. You can see you have a lot of choices here. You have to make it. So it's in your hand. In addition to these 4 products, which was earlier, if I'm the manufacturer of these 4 products, I am not entitled of a composition scheme. With respect to the same now, fly ash, bricks of foils, building bricks, earthen and roofing tiles have also been added. The reason for adding these 4 products, you can see here, fly ash, the modern and popular fly ash. Now almost every building is built out of fly ash. Okay. Next one is foils, brick of foils, which has been used mostly in star hotels, entrance and all. You can see that bricks of foils being used. Bricks, this one is a normal red brick which has been used there. This one is a normal red brick which has been used over there. And then we have something called earthen tiles, which is the normal earthen tiles what we have. And then, roofing tiles. Roofing tiles is a very popular model. You can see it in Kerala and all those stuff. And if you're a manufacturer of all these 5 products, there is no composition scheme for you. There is no composition scheme for you. You have to go with the normal supply only, and you have to go with the normal rate only. No special or concessional rates is applicable for you. Right, my dear? So that's it when it comes to composition scheme. These are the amendments. The manufacturer of all these 8 products are not entitled to composition scheme. They are not entitled to composition scheme. They have to go with the normal one. They have to go with the normal one. That's the latest amendment. And then comes in as an exemption chapter. And then what comes in is an exemption chapter. In exemption chapter, straight away 3 and 3A. In pure service with respect to construction or service with respect to labor part, what they have done is pure service provided to government authority and government entity has been removed from exemption, meaning thereby if you provide a service to government entity and if you provide a service to government authority by way of pure service, let me give you an example of pure service. Let's understand Tamil Nadu government is now doing this. Anyone who is from Tamil Nadu being here in capital of Chennai, okay, you will be able to understand that. You will be able to understand that. One second, my dear. One second, just give me a right, my dear. Let's understand Tamil Nadu government asked me to provide only excavation work to dig the ground for building this rainwater storm harvester. Okay. So what happens here? I'm doing only a service. I'm not supplying any goods. What I'm doing a pure service. To whom I'm doing? I'm doing it for central government, state government, union territory, local authority. Aribba, no problem. It's covered in Article 243A, 243W, which is basically function entrusted to municipality and panchayat. Only a function entrusted to municipality and panchayat will be covered there for exemption, not all other works. Sir, I am doing a pure service which is not covered in 243G, 243W, then it becomes taxable. So only whatever is specified, these are called conditional exemptions. Only these will be exempted. Only these will be exempted. These will be exempted. And in this exemption, previously, government authority and government entity also used to enjoy the exemption. Now that has been removed. Meaning thereby, they are not ready to give you exemption. They have withdrawn the exemption. Pure labor service provided to pure labor services provided to pure labor services provided to pure labor services provided to government authority and government entity is now taxable. It is not exempt, even though it is covered under Article 246A and Article 243G and 243W. If it is covered, does not matter at all. It is fully taxable. Nowadays, it is fully taxable. And my dear brothers and sisters, the next one is of a similar category. Next one of a similar category. Next one is a very, very similar category, which is composite supply. What does that composite supply mean? It means point number one. Sir, this time government is not just asking me to excavate. That is to say, dig the, place. Instead, now government is asking me to excavate. That is to say, dig the, place, and also.
Sir, parking.
Hey, sorry, 1 minute. Wait. Government is asking me to also, provide me some materials, for example, concretes or, steel, something, rods. It is asking me to provide them all. Fine, I'm providing them all. Right now, what is the value of such provisions? That materials does not exceed 25% of the value of the said composite supply. Why composite supply? I'm providing labor and also I'm providing this particular material for the purpose of, completing the task. When I do this both, it becomes a composite supply of goods and services I'm providing together. And that is covered under Article 243G and 243W as well. And one more example I can give you is such a kind of supply is, collecting the solid waste, maintenance of street light contracts and all these stuffs, wherein, the material value will be less than 25% and service component is more. And previously, all such services provided to, look at this, my dear, service recipient. Who is the service recipient, sir? The service recipient previously, all the 6 category people, including government authority and government entity, but now this too. When a composite supply which involves 25% of the material, it is covered in Article 243G and W, also provided to government authority and government entity, becomes taxable. It has been removed from the exemption, withdrawn from the exemption, making it taxable. So government is slowly widening the tax base and tax net. And next exemption is with respect to transportation of passenger connected to e-commerce operator. If recollect quickly what I have given you in the e-commerce operation, my dear, I said this particular increase in the scope. I said transportation of passenger by any modes. Transportation of passenger by any modes, if you provide through e-commerce operator, it is getting covered in the e-commerce operator. That means we have to remove it from the exemption category also. Right? Look at this. Transportation of passenger with or without accompanying belongings, providing by any way. Air, stage carriage, non-air conditioned, anything you do, provided that nothing contained in item number B and C of the above shall apply. Blah, 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 blah. It will not apply. Notified under e-commerce operation. So, my dear, air transportation of passenger is not at all a subjection. It is fully taxable. Air travel agent is also fully taxable. We have no other, question. Transportation of passenger by roadways, that question have been brought into the picture. Now we understand this way that if the passenger transportation happens through e-commerce operator, say for example, I'm traveling and I'm booking a red bus. Okay, I'm booking, SRM travels, a ticket in SRM travels via red bus. Service is deemed to be provided by the red bus and not by SRM travel to me, the ultimate consumer who is actually traveling. So this amendment ensures that Earlier, the exemption granted to stage carriage. Now, SRM Travels cannot enjoy the benefit of stage carriage exemption. Why? Because SRM Travels has provided that service through e-commerce operator. Now, SRM Travels will be out of the picture altogether. Who is the deemed service provider for me? E-commerce operator. Redbus is the deemed service provider for me. So that's the latest amendment with respect to transportation, and that covers in all modes of transportation by roadways. So even if you here see motor cabs and auto rickshaws also, when you provide it through e-commerce operator, it has been moved out of exemption. Why? Because e-commerce operator is deemed to be a service provider and not the actual service provider. My dear brothers and sisters, that's it with respect to exemption chapter. There are 4 eventual amendments, of which 2 is of the category of government entity, government authority being removed, and 2 where the transportation of passenger by roadways, where transportation of passenger by roadways provided through e-commerce operator, for its exemption is not applicable. Why, sir? Why exemption is not applicable? Because now the e-commerce operator is deemed to be the service provider, not the original service provider. Original service provider's liability was shifted from him to e-commerce operator. Since e-commerce operator is a bigger, larger service player, we are making him liable. Since he is liable, we are not giving him exemption, increasing the tax base again. Sir, is it not bad for the economy when it is not burdenful on the consumer when actually exemptions are withdrawn? My dear brothers and sisters, the whole objective of the GST is not to give exemption. Exemptions are call of the day taken by dirty politicians, with all due respects, to pollute the law and its intention. Sir, how you can say this statement to me? With all due respects, what is the whole objective of the GST? To avoid cascading and cross cascading. Is it not, my dear? What is the whole objective of GST? To avoid cascading and cross cascading. And objective of GST is to not give exemption. That means essential, which is required by the recipient really to support their being or the purpose, only should be entertained under exemption category, because exemptions are leading to cascading. Exemption will lead to cascading. Indirectly, it will lead to tax spirals. So we have to be mindful over there, right? So that's with respect to exemption chapter. And one more beautiful amendment which has been brought into the system is section 16 subsection 2A in your ITC chapter. The only amendment in the ITC chapter relevant for your examination is this. What is that, sir? Previously, we used to have a calculation, my dear. Let me have an Excel also for you. See, previously, we have a clarity. What is the clarity we used to have? That is to say, item. Or I used to say inward supply. I am not supposed to call it as purchase. So inward supply reflected. Inward supply reflected in GSTR 2B. Earlier 2A, now we'll call it as only 2B, right? Reflected in 2B. Earlier, I'm talking about before amendment. We used to say fully avail ITC. Fully avail ITC, no problem for me. The law says entitles me to take full ITC. Absolutely not an issue. Right, my dear? Once again, my dear. Guys, I'm just taking I'm sure Hemant is online. Hemant, you're there with me, my dear?
Yes, sir.
Yeah, Hemant, it's a tricky place ahead of me. There's a lot of vulnerability. I just have to manage my vehicle for some time. Just give me 5 minutes break. I'll be back on, and kindly balance this. I'll come and compensate. Don't worry. 5 minutes, please balance without me. Thank you so much.
Sure, sir. Okay. So yes, student, we will be having 5 minutes break. Students can post their questions in chat box. Whatever questions they have, they can post their question in chat box. We will take it up at the end of the session. Yes, tips also, and also tips, everything we will be asking to the faculty at the end of the session. So we can take 5 minutes break. So I will let you know when the SAR comes back. Thanks, everyone.
My dear brothers and sisters, thank you so much. Hemant, can I resume, my dear?
Yes, sir. Sure.
Thank you so much. I'm really honored with your facilitation. Thank you so much for understanding and being there. My dear, inward supplies, which is not reflected. Inward supplies, which is not reflected earlier. See, this is old, before amendment. Okay. This is before amendment. What happened is not reflected. With respect to which is not reflected, they used to allow A or B, whichever is less, they used to allow. What is A, sir? A is 5% of ITC, 5% of ITC with respect to reflected. With respect to reflected invoices. My dear, please bear with my hand. No typewriting. We are not typists basically. We are just going in the speed. Okay. Reflected invoices, 5% of the ITC of the reflected invoices. Or B, we have the actual ITC with respect to invoices not reflected. See, here we have to carry a understanding. Okay, what is that? Sir, when this will get reflected in GSTR 2B? Tell me, my dear. Only when the supplier files a GSTR 1, right? That means when the supplier files a GSTR 1, the corresponding portion transforms to GSTR 2A, and after that it comes to GSTR 2B as an eligible. Only then you can take avail credit now. As on day, this is the reality factor. This has got effective from the previous examination itself. Right? Now, government is just reaffirming their stand. They said, remember, previously we gave you relaxation for invoices not reflected in 2B. Because you guys were early to GST, you guys claimed that ignorance of law, you guys said practices will take some time to get implemented. So government gave you 5 years. Gradually, government stepped up the effort of 2B and they said, and they reduced the percentage of eligibility. Relaxation, they have kept on reducing. Earlier it was 20%, then brought down to 10%, then brought down to 5%, and now government says 0%. I will not give you anything. So this is before amendment position, my dear brothers and sisters. This is what you would have been, up to last examination, you would have done this. Now, what is the case for current examination after amendment? What does this amendment mean? This amendment mean very, very simple. This amendment says, with respect to ITC, with respect to inward supplies, invoice reflected in 2B, fully available ITC, there is nothing. And with respect to those which is not reflected, fully not available. Your ITC is not available. ITC for you. It's like a blocked credit. You can't take credit. You can't take a credit there. My dear brothers and sisters, I'm sure this will give you abundance of clarity. Now let's have a look into the provision. What does the provision has to say for us? No input tax credit shall be availed by the registered person in respect of the invoices and debit notes, the details of which is required to be furnished in 37.1, which is nothing but GSTR 1. The supplier should have furnished the details in 1 or IFF as the case may be, and the same shall be communicated in GSTR 2B to the recipient. If that does not happen, I'm sorry, you're not entitled to no input tax credit unless these conditions are satisfied. Meaning thereby, if your recipient fails, there is no relaxation, there is no further relaxation to you. So therefore, straight away it becomes ineligible. So expect a number crunching. Saying that ITC reflected as 2 lakhs. With respect to ITC not reflected as 50,000. And how much is the eligible ITC you have? So my dear brothers and sisters, eligible ITC is going to be now only, eligible ITC is going to be only 2 lakhs for you. Only this becomes eligible, nothing else. So this is eligible and this is fully not eligible. This is fully not eligible. Everybody, my dear, are you comfortable? So that's what
your screen is stuck in Excel. Only one line is visible. That's inward supply. That row is alone visible, sir. Can you reshare, share the screen again once again?
Once again.
Yes.
Is it anything? Now I reshared.
Once again, sir, it's loading. Once again.
Is it any better?
Yes, sir. Yes, sir. Now it is clear. Only first line came previously. Now it's fully.
Hey, how long this difficulty? Yeah, for the entire session you missed it.
No, sir. Only this Excel part.
Only this Excel. Do I have to re-explain?
Short explanation you can do, sir.
Okay, my dear, very simple. See, before amendment, if any GSTR1, see, what is the flow? Let me explain the flow. Okay. Here we go, my dear. See, the flow is that supplier, and supplier, I'll use the shortcut of SS. Supplier has to file GSTR1. Kindly bear with the handwriting also, especially in the moving car, my dear. This GSTR1 will come to recipient. This GSTR1 will come to the recipient as a GSTR2A. And this 2A have to be further classified. It will be furthering itself. All auto population, it will transform itself into 2B. In this, whatever is eligible, only that you are entitled to take. This is what eligibility portion as of now. So, if the supplier fails to file the GSTR1, if you are choosing a substandard supplier, my dear, that's the end of roads for you. Previously, government gave you the relaxation. Previously, before amendment, government gave you the relaxation. If your supplier has defaulted you by not filing, government is lenient enough to provide you 5% of ITC reflected or actual ITC, whichever is less. But today, government is not that lenient. Government says either comply or give up your credit. So today, you might get a question saying that inward supplies against which supplier furnished the GSTR1, meaning thereby it is reflected in GSTR2B. For you in eligible category, very importantly, is 2 lakh and not reflected in 2B is 50,000. So what is the eligible, ITC? Can be a potential MCQ question. The answer for the potential MCQ question is 2 lakh. Whatever is reflected, whatever is furnished by the supplier in GSTR1 and subsequent to that, whatever the amount get carry forward in 2B, only that is eligible. So this is eligible figure. Previously, if the same scenario is there, let's assume 2 lakhs is there. And what is not reflected, let's assume what is not reflected is the same 50,000. And previously, before amendment, you will be allowed to carry on 5% of 2 lakhs, which is 10,000, or actual ITC, which is not reflected there, 50,000. So whichever is less, so they would have said you are entitled for 2 lakhs, plus you are entitled for whichever is less of this 10,000. So previously I'm entitled for 2,10,000. Previously I'm entitled for 2,10,000. But now after this amendment, government says, no way, Baba, I'll give you only 2 lakhs. So what is the logic reason behind this? Very simple, my dear. The logical reason behind this is very simple. Now, please understand this. See, recipient. Let's understand. See, recipient pays the tax to the supplier, who is basically acting as an intermediary, and the supplier has to in turn pass it on to government. And if this recipient is a businessman, basically wants to earn the profit, government gives whatever the tax received by it back in the name of input tax credit. So to give this to the recipient, government has to first receive it. And if the government itself is not receiving it, they said, boss, if I am not receiving, I'm not giving it to you. Makes a lot of sense, right? If you have been in this position, you will also do the same thing. You will not be doing anything else. You will also literally do the same thing. So that's what government has said today. In the rest-while taxes, there is no such provision. People are shedding crocodile tears about this particular provision, saying this is injustice for the error made by the supplier. Recipient is suffering. My dear, for the error made by your choice of going to the supplier and for the error made by the supplier, government also cannot suffer for you. Only if the government has received the tax, it can give it to you. So without receiving the tax, how can expect this? This is totally illogical. Just because government, you can't put such financial pressure on the government. So I totally second with the government's opinion of saying that, Baba, I will not give you the ITC unless I have received the money. Totally acceptable, right? So everyone, my dear, you are with me? Everybody. So since we have done with the ITC chapter, which is chapter number 6, I'm going for registration chapter. My dear brothers and sisters, registration chapter. We all know the threshold limit for registration has been different. Okay. So let me quickly explain you that. So we have have a chart for that purpose. Once again, please help me to have my chart. Into number 22, yeah, here we go. Registration chapter. Guys, see, this is the table which I will strongly recommend you to have a close look at us. As far as the threshold limit is concerned, if you're operating in MMNT states, that is to say Manipur, Mizoram, Nagaland, Tripura, in these 4 states, if you're there, your threshold limit is restricted to 10 lakhs. Whether you do goods, whether you do services, doesn't matter. In these 4 states, it's restricted to just 10 lakhs. Other than these states, other than these 4 states, the threshold limit extends to 20 lakhs. Everybody, my dear. And other than these 4 states, but you are in any of the 6 states, that is to say Puducherry, Arunachal Pradesh, Meghalaya, Uttarakhand, Sikkim, your threshold limit is restricted only to 20 lakhs. You cannot go for further. But if you are operating in states other than PAN must states, sir, PAN is a 10 digit. So I'm giving you a small acronym, PAN must. See, income tax, if you want to file a return, PAN is must for you, right? So understand this way, PAN must. 10 digits, no, 10 states. What are the 10 states? Puducherry, Arunachal Pradesh, Nagaland, Manipur, Mizoram, Meghalaya, Uttarakhand, Sikkim, Tripura, and Telangana. 10 states. 10 states. If you're operating in other than other than PAN must states, so I'm using the acronym other than PAN must states, your threshold limit can go up to 40 lakhs, provided subject to other conditions. I'm sure you can see this word, subject to other conditions. Sir, what are all the other conditions, sir? The other conditions being, you are not supposed to be a person coming under compulsory registration, or neither you are the person who have taken the voluntary registration. And then you are not supposed to be making interstate supply. You are supposed to be making only intrastate supply within these, other than this 10 states. And the very, very important one more condition is, you are not supposed to be engaged in making supply. My dear brothers and sisters, look at the difference. Composition scheme supply chapter, we have seen the same set of products, right? Here also the same set of products, but what is the difference? In composition scheme, the wording used is any person engaged in the manufacturing of such goods. Any person engaged in the manufacturing of such goods. Any person who is engaged in the manufacture. See, section 10 uses the word. Section 10 uses the word. Okay, manufacture. Okay, composition scheme prohibits the utility of composition scheme supplier. Prohibits the utility of composition scheme supplier who are engaged in the manufacturing of such goods. Whereas when it comes to registration, if you are operating in other than PAN must states, in registration chapter, if you are operating in other than PAN must states like Karnataka, Andhra Pradesh, Tamil Nadu, like these states, which is not there in the PAN must. That's why we use the acronym other than PAN must. We use the word other than PAN must. We are using the word other than PAN must. Please appreciate, guys. If you are dealing in such goods, you are not entitled. What do you mean by you are dealing in such goods? Sir, if you are even trader in these goods, you are not entitled for 40 lakh threshold limit for registration. You are entitled only for a lower threshold limit. For example, sir, what if the case I am dealing in other than PAN must states? Let's say I'm dealing in Tamil Nadu. Okay, I'm dealing in Tamil Nadu or Karnataka or Andhra Pradesh or Kerala. All are other than PAN must states. Okay, all are other than PAN must states. I'm dealing in these states. Okay, my dear. Okay. I'm dealing in these states, but I'm dealing in building bricks or aerated waters. I'm a supplier. I'm a trader. I'm buying and selling aerated waters, ice creams, building bricks. My threshold limit is only 20 lakhs. My threshold limit is only 20 lakhs. It cannot be 40 lakhs. Suppose I'm a dealer in laptop, mobile phone, other than these 8 products. I'm in Tamil Nadu, Andhra Pradesh, Kerala, Karnataka. My threshold limit for registration is 40 lakhs. My dear brothers and sisters, latest amendment has come in expanding the scope of limitation to this 40 lakhs, extending it from only 4 products to 8 products, wherein the same bricks, earthen tiles comes into the picture. And I'm sure you have understood that fly bricks, fossil bricks, building bricks, earthen tiles, all in the composition scheme. The only difference is composition scheme prohibits manufacturer of those goods from entering the composition scheme, whereas registration chapter prohibits these dealers also from enjoying the extended threshold limit benefit. They say you are entitled only for the 20 lakhs, lower threshold limit. Sir, suppose what if all these people are, operating in Manipur, Mizoram, Nagaland and Tripura, MMNT states, their threshold limit is just 10 lakhs. What if they do it in pan-master states? Only pan-master states other than MMNT, which is Puducherry, Telangana, Manipur, Meghalaya, Sikkim, all these states, their threshold limit is restricted to 20 lakhs. And Tamil, other than Panama states also, their threshold limit is restricted to 20 lakhs. Sir, when they will be coming for 40 lakhs, sir, condition has to, all the 4 conditions has to satisfy. What is that? You should be dealing only in goods. You should be not coming under 24. You should not be coming under voluntary registration. You are other than pan-master state. And 5th condition, you are not supposed to engage. You are not supposed to engage. You are not supposed to engage in any of these. You are not supposed to engage in any of these, specified products for the sake of trading also. You are not supposed to engage in all these criteria. Everybody, my dear. And that's an amendment with respect to registration chapter, first one. And second one, there is a new introduction called Rule 10B. Let's go ahead and enjoy Rule 10B also, my dear. In the registration process, Aadhaar authentication has been made mandatory. In the registration process, Aadhaar authentication has been made mandatory for you guys. Sir, what has happened, sir? How they has brought in, sir? Guys. Yeah. What happened? Let's understand. They say, if you are a proprietor, partner, karta, managing director and trustee of all these people, it is compulsory for you to go for Aadhaar authentication. What if Aadhaar authentication is not done, sir? Sorry, if Aadhaar authentication is not done, we will disturb your routines. What is that? How they will disturb? If at all cancellation or suspension happen, you cannot file an application for revocation of cancellation, provided Aadhaar authentication is not there. That is also not a big deal. Yeah, the big deal is this. What is that? I can't apply for refund. My application for submission for refund will be prohibited. It will not allow. System will not allow. System will not allow refund application being filed just because of the reason my Aadhaar authentication is not done. So now, first thing, please go ahead to do and advise all your clients, if at all you have been into the practice, to do the Aadhaar authentication without fail. Government has given enough times for new registration. Without Aadhaar authentication, practically registration itself will not be granted. Right? So therefore, it is a very, very important amendment they have brought in. Okay, sir. What if I don't have Aadhaar authentication and I'm going to apply for Aadhaar authentication? Government says, okay, fine. If you are not doing it immediately, you are supposed to make an application for Aadhaar. If at all I don't have Aadhaar, you are supposed to make an application for Aadhaar and you have to submit any of this 4, only any of this 4. Bank passbook with photograph, voter ID card, passport or driving license. Only any of these 4 ID proofs have to be, given along with the, application, and within 30 days of Aadhaar authentication, you are expected to submit the Aadhaar copy, update the Aadhaar authentication in the website. This is the latest update of Rule 10B. My dear, Aadhaar authentication has become mandatory. If I don't have Aadhaar, I have to apply for Aadhaar and I have to give the enrollment number along with the ID proof, and I have to update the Aadhaar within 30 days for its allocation. And only if I do that, they will allow me to make an application for revocation of cancellation if at all cancelled, and if they allow me to go for the refund application. Very, very, very important update with respect to Rule 10B with respect to registration chapter is this. These 2 amendments are the latest one applicable for their examination. In your material, they have given the other amendments also, either which is outdated that is to say it has been already covered in the previous statutory study paper, or which is not applicable for the November 22 examination. Guys, ignore those and all. Ignore those and all. Relevant amendments are only this two, right? I'm going for the next chapter called Tax Invoice, Debit Note, and Credit Note. My dear brothers and sisters, as far as this particular chapter is concerned, please understand there was a constant revamping. As and when you and me discuss on this particular provision, 15th October 2022, please understand, we don't have this provision relevant. 20 crore, now it is applicable only for your exam. Why, sir? This amendment was brought in January. By 1st October, practically speaking, this is all brought down to 10 crores, and already news is out. Government is planning to bring down this to 5 crores, which is most expected. And definitely that's going to happen. That's going to definitely happen for sure. So no second thoughts. So my dear, what is this amendment relevant for the examination? That's very, very important. We have to, check. The first one is manner in which invoice has to be issued. The manner in which invoice has to be issued with respect to business. If my turnover exceeds 20 crore, then please understand, I have to go for e-invoice. And I cannot go for physical invoice. I have to go for the e-invoice. And that has to be done in the e-invoice portal. If that not be the case, let's understand, if my turnover is less than 20 crores, I'll be going for physical invoice. For goods, 3 copies, and for services, 2 copies. So amendment happened where, sir? Amendment is with respect to 50 crores, bringing down to just 20 crores. Right, my dear? So that's with respect to e-invoice. And this is the respective notifications. As you could see over here, there is one more column which I will be adding. I'll be adding. You focus on the road. Okay. There'll be one more column I'll be adding over here. Yeah. Next one is filing of returns. I'm going to the returns chapter where the conditions for availing the returns will also be taken. Guys, just a second. Guys, with respect to the returns chapter, we have the following only one amendment. What is that, sir? Condition for filing GSTR 1. My dear brothers and sisters, it has been very clear that previously GSTR 1 was not allowed to be filed if 2 months GSTR 3B was not filed. There was a restriction, there is a proviso added to section 37, which previously said, I will not be allowing any defaulting assessee who has not filed the returns for the period. So I should know. Sorry, my dear, please. Okay, now coming back. So the conditions for filing GSTR 1 we have been discussing. We have understood that this is the last relevant amendment area, my dear, for your examination as far as the inter is concerned. Returns chapter. What is this returns chapter is all about? My dear brothers and sisters, the returns chapter is all about only one amendment. Previously, if I don't file due to GSTR 3B due dates, so let's understand. As of now, let's take the current affairs into example. 20th October comes. When 20th October comes, there's a due date for filing the return for the month of September. Sir, previously, before this amendment, I have not filed August month return and September month return. Only then I'll be prohibited from filing GSTR 1 for the month of October. But now, with this amendment with 1st January 2022, every month relevant. Sir, I have not filed September month GSTR 3B. Sorry, October month GSTR 1 I cannot file. What is government is trying to say? Government is trying to say, if you are not paying the tax to me, sir, why tax payment has to be linked to GSTR 3? My brothers and sisters, the due date for payment of tax is due date for filing the returns. The due date for payment of tax is due date for filing the returns. Therefore, law very clearly says, now the government intention is well communicated. What is that? They say, if you don't pay me the tax of the previous month, I will not allow you to do the business and pass on the credit for the next month. Makes a lot of sense. Now, what is the mantra government is saying? Government is saying, if you don't comply with the law, if you don't comply with the law, I will not, if you don't comply with the law, I will not allow you to do the business. Comply and continue the business. If you're not complying with the law, don't continue the business. Sir, people will come out with, a lot of crocodile tears, and they will come out and say, what is this? Government is getting so stringent. Arey Baba, everywhere today, this should be the protocol. Only when the punishments are getting stringent, compliance will happen. Right? See, how many of you agree with me? I don't know, but this is a reality. Sir, people very proudly say, in Middle East, no rape cases were reported. Why? Very simple. In Middle East, if anyone was accused of the rope and accused of the rape or any sort of physical advancements against women, and if it is proved, they will be beheaded in the public. They will be, brutally, that will be executed in the public. They'll be hanged or they will be beheaded. They'll be shot. The death sentence will be, completed in the eyes of the public. So, my dear, when the punishments are heavy, people will fear the punishment and they will not do it. Of course, human being must carry the responsibility towards themselves. Self-reliance and self-compliance, it has to be the call of the day. But how many people will do that, my dear? Take example of all the two-wheelers which we are riding. And, when we see others were riding, unless you see the signal traffic police is standing, you will not actually put your helmet on. The helmet will be decorating the petrol, tank. In car, we will not fasten our seat belt. And for us all to fasten the seat belt, either Cyrus Mystery has to give up his life in a fatal accident and die, and people have to identify the root cause for the death is not wearing the seat belt, or police officer have to stop us in the signal saying that you're not wearing the seat belt. That is when we do it. Why? When the punishment is getting stringent, when the effect is going to be a life, you will automatically go towards discipline. And I'm sorry to say, such things is required to some extent. How many of you, let me ask you frankly, how many of you have practiced a model exam? CA Institute is conducting mock exam. How many of you have done the mock exam? Mark my words. Mark my words. I am not threatening. I am not putting anything harsh on you guys. I'm not putting anything harsh on you guys. I'm putting it in a reality. I'm putting it on a reality. It's just a 1 minute. So just asking you this question. So if at all, people who have written the mock test, that's all available in the paper you are available. No, that will be great. But once again, think how many of us are preparing for the exam and willing to go and turn the exam into the model exam. I've seen n number of people. Okay, who will make the main exam into a model exam without proper preparation, without proper practice. We guys read, right? We don't actually practice. That's a problem. So we have to practice, guys. We have to practice. So one and only when you practice, we will be able to, do things properly. So my dear, this is all with respect to the amendment. And now I'm going to take you through with respect to the strategy, how you have to follow for the examination. Once again. Yes. Let's go for the fresh page and, take it up this way. Guys, 1 minute. My dear brothers and sisters, I'm sure my voice is audible. So let's go for the examination strategy, my dear, straight away. In the shorter span, what we could do better, we have done it. Let's go ahead for the strategy, my dear. What we have to focus a day before examination, sir, where I should, think about. See, my dear, keep this way. Keep your priority as ITC chapter, followed by value of supply, followed by value of supply. Focus on these areas first. And after value of supply, please go ahead too, because these are for sure 5, 10 mark practical questions which will be coming, number crunchings which will be hitting the area. Okay, in ITC the question will be 99% your question is combination of eligible conditions, which is read with section 16 subsection 2, read with rule 36 and 37, and then blocked credit section 17 subsection 5. Your examination question will be a combination. Your examination question will be a combination of these areas. Please focus more on that area. As far as value of supply is concerned, it is going to be a combination of inclusion plus discount. Inclusion plus discount. So please be mentally prepared for any 3 inclusions plus 1 discount area, so that you can solve that particular question as such. So these are the focus point when it comes to value of supply chapter as such it is. And then after that, what I'm supposed to do is go for registration chapter. Okay, go for registration chapter. This is a big area. And after registration chapter, what I'm supposed to do? Okay, registration. What is the focus? What is the focus area, sir? Sir, please focus with respect to Aadhaar authentication, latest amendment, revocation of cancellation. These are the priority areas which you have to focus. My dear brothers and sisters, when I say priority area, I'm not saying all other areas are not important. Priority revision area is what I'm giving. I'm not giving expected area in the examination. I'm not a jadukar who will say this will come, that will come. No. What if that not comes? What if that not comes? Can I take responsibility for your life? That's not possible. Okay. So you should take responsibility for your own life. As Swami Vivekananda says, you are the co-author of your fate. Don't allow your fate to be written by my words. I can't accept that to happen. Realize, wake up from the inertia. You are responsible for your life. I am only an instrument guiding you. That's it. Okay. So as far as I'm concerned, registration chapter, these are priority areas. I'm not saying expected for the examination. These are priority areas. So next to registration chapter, you have to get into tax invoice chapter, wherein you will have to focus on revised tax invoice provisions, and debit note, credit note provisions, especially credit note. Okay, debit note, credit note provision, especially credit note is a focus area for you. Time limit for issuance of the credit note. Okay, time limit for issuance of the credit note is restricted to 2 years, and time limit for debit note, there is no time limit for debit note. So question can come based on that. And there is also a probability a link question is possible. How they will link, sir? Registration chapter plus tax invoice. So there will be a deadly combination of application made within the specified time limit and revised tax invoice. This can be one probability. Second probability in tax invoice chapter is debit note and debit note plus ITC on debit note. This is a probability which they can ask with respect to ITC and debit note chapter. So please focus on these area, my dear. Focus on these area. You will be getting a question on these area more likely. So that will help you in tax invoice, debit note, credit note chapter. Later on, what I am supposed to go, which chapter I have to address, sir. You will be surprised if I list you guys. Return chapter, you have to focus on QRMP. You have to focus first on QRMP, and later on you have to focus on GSTR 1, and then you have to focus on GSTR 3B, and then you have to focus on late fees. These are the areas you have to focus, especially late fee. I mark it very important because I'm expecting a question in this area. Okay, late fee, minimum and maximum late fee has undergone a change. Therefore, you are expected to be at your best in solving the problem, in quantifying the late fee component. After that, I would suggest you to go for the payment chapter, wherein in payment chapter, I would strongly suggest you with respect to, electronic cash ledger, wherein there might be a question with respect to transfer of balance and electronic credit ledger. Electronic, as far as electronic credit ledger is concerned, nature of utilization they can ask for. Nature of utilization, order of utilization, or restriction with respect to utilization. Sir, when I say restriction, please be mindful 86A and 86B rules. Okay, restriction for utilization, restriction by proper officer, and restriction by self-restriction for you paying only up to 99%. That can also be a probable question for you. And then remember to practice question on interest calculation. Interest under section 50. A very, very important area as far as the examination is concerned for the practical nuances. Guys, complete these chapters, and after completing all these chapters, go and take something called composition scheme. Go and take composition scheme, because if the question comes from the composition scheme, it's a straightforward 5-mark question. So complete composition scheme, and after that the chapter what you have to step in is RCM. And after RCM, you have to check into exemption chapter, and after that only you have to go for time of supply chapter. Guys, this order, if you prefer, if this is the order, if you carefully analyze, volume 2 and with volume 1, only one chapter called value of supply gains lot of importance. And after completing this, you can come to supply chapter. And in supply chapter also, I would say first complete supply chapter, also first complete composite and mixed supply. Composite and mixed supply first complete, and after completing that, I would say come to supply chapter. Balance section 7 you can complete, and after that you can come to introduction chapter. All are important. So introduction chapter, what they are going to ask, sir? Introduction chapter taxes subsumed, and question about GST network, and they can also ask about seamless flow of credit. These are the influential areas you can actually look out in these respective areas, my dear. So focus in this priority area. You will have an absolute, if you focus on these priority area, you will have absolute control over how to proceed. And remember, you're preparing this only for the sake of 40 marks. You're preparing only this for the sake of 40 marks, because 60 marks you have something called DT coming into picture. 60 marks you have something called direct tax coming into picture. My dear brothers and sisters, put together there is going to be 5 volumes or 4 volumes of material. My dear brothers and sisters, realize it's not humanly possible to revise everything a day before examination. So please understand, you are preparing for the exam right from now. All these 10 months you guys are preparing for the exam only. That is why I said these are priority areas. Arey chalta hai ya. If you are covered ITC, value of supply, registration, tax invoice, return, payment, composition, RCM, fine. Sir, I have not revised exemption, time of supply, all these basic chapters and all. I would strongly say don't panic. If you leave in choice, that's an issue. But you have read all these things, but don't expect 100% to be covered before the examination. And this is a basic mindset which a student will carry, is that if you don't touch it before the day before examination, you will not be able to solve that question. That's an absolute denial against the fact. Your mind is so powerful, it will retrieve and it will give it to you. See, when you are meeting your childhood friend after 10 years, are you not remembering him and talking to him, calling him by name, and recollecting the sweet moments with him? When your mind is capable of recollecting an event which is 10 years happened before, and after the last 10 years you have never spoken to that friend, that means that friend is not a very, very close friend to you. But still your mind remembers that. Still your mind recollects that. When your mind is capable of retrieving such an information, please trust your mind. Why you don't trust it for the exam? Trust your mind. You are capable. You are capable. My dear brothers and sisters, with the positivity around you, humble request being that don't be late to the examination hall. Use the moments very clearly. Okay, follow the examination rules. Be there 15 minutes, read 15 minutes to prioritize the first question, which will fetch you the maximum mark. Don't ever panic. Don't ever allow one examination impact to influence the other examination. That is not acceptable. Sir, yesterday I have fallen down in steps. That does not mean today also I have to fall in steps, and tomorrow also I will fall in steps. No, I can't accept that. So, sir, I have not done accounts well. It's okay, fine. Chalta hai. Next exam you might do super duper. You might get even 80. Who knows? Don't allow that to happen. Don't come out of the examination hall with the question paper and book in the hand to value your answers. You're not the evaluators. You are only examining. You have to write the exam. Your duty is to write it. So post examination, don't do postmortem work. Just leave that. Come out of the examination hall. Don't discuss the answer. Take a fresh cup of coffee. Go ahead to enjoy preparation for the next exam. Sir, after the last exam, what we are supposed to do, sir? After the last exam, your heart will tell you whether you have done all the exams nicely or not. Follow your heart. If your heart says you have not done, you are not expecting a good result, don't cheat yourself and the loved ones. Pick up the book and start preparing from the next day. You will save 2 months. You will be well ahead. Cover all those areas, whatever you left. Do justice. Do revise all the RTP. Do solve all the questions in the ISM before getting into the examination hall. I'm sure which you all be doing. Please do practice mock test papers released by the ICAI. That's also very, very important. And my dear brothers and sisters, with amendments, RTP, mock test, you will mop up somewhere around 20 marks for every subject here itself. So with this closing remarks, I wish you all success and I wish you all the best for the examination. Give your best, remain positive, don't compare yourself, don't compare your performance, don't carry forward your expectations to the examination hall. Come what may, go enter the hall with open-mindedness. Whatever comes, you will be writing your best. You'll be giving your best. This should be your thought process. My dear brothers and sisters, go ahead, enjoy, rock the examination and come out with flying colors. Gift all your parents a very, very, very happy tears on your exam, on your result day, right? Pongal ungal result udan pulirattum. Okay, my dear. Thank you so much, Sikasa, once again, and thank you so much, Hemant, for being so tolerative and cooperative for my deviations. Loving you all so much, my dear brothers and sisters. Thank you so much, guys. Bye-bye.
Thank you so much, sir. Thank you so much for your valuable time. It was a wonderful session. Yes, sir. Can we wind up the session?
Yeah, thank you so much, my dear. I'm giving a stop sharing for all of you guys. Bye-bye.
Thank you, sir.